Good morning and welcome back to Trade Live with IG. I'm Luke Moore, one of the premium client managers here, and I will be with you for the first hour. And someone else has turned up today.
Top of the morning to you. Very welcome to you all. We've got Naked Johnny and Monkey Man in the chat already. Things I never thought I would say on the show.
Live on TV. There you
Now,
go.
we need a nickname for you as well, Luke. I've gone with Luke the Book Moore this morning because you're so knowledgeable. You're like an encyclopedia. But I think we can probably find a better one. We do have more Lukes on the show this morning than a Star Wars trilogy because we've got little Mini Cooper coming in
Little
on
Luke's
as
coming
well.
Little Luke's coming on. Very good. You're very lucky to have Little Luke and Luke. So that's big. We're trying to get junior and senior work on the dealing floor. Let's not tell Pega or anyone in HR that, but we're trying to figure out junior and senior. There you go.
So as in your nickname will be Senior?
As in, if you need to speak to me, you speak to Luke. If you want to get hold of Junior, you need to ask for Junior. That's what we're trying to make work.
No, I don't think
that works.
Yeah, because
Supposedly.
in Tasty then there's Shark and Baby Shark.
Right. Okay.
So yeah, Baby Shark, they get away with that. So I think you can get.
Yeah, I think Junior is better than Little Luke.
Oh yeah, Mini Cooper. We
Mini Cooper.
Yeah.
Mini Cooper's a good one.
Yeah.
Yeah, Mini Cooper. So look, if you can do better than Luke the Book more, feel free to let us know in the comments.
We also need a new nickname for yourselves, okay? Because I'm not personally happy with Dirty Dogs that Ange goes with.
Or
I just don't think that fits the whole culture of the show. Maybe you think different. So I know Tony Batista on Tasty Live goes with Knuckleheads. So you tell us what you would like to be called collectively, and we'll have a good think about that.
yeah, I mean, Dirty Dogs or Knuckleheads. We're kind of going pretty negative on both, aren't we?
Yeah.
I feel like we need to jazz it up a little bit. You know, you're our listeners, clients, friends, people that we speak to all the time.
Trader friends.
Trader friends, yeah. Trader friends is an acquired taste, I think.
Yeah, so yeah, we might put it to the vote. We'll get a TikTok on it of all the different clips of us.
Making names.
Yeah.
Let's do it. Let's do it.
Right, we've had quite an interesting 24 hours.
You can say that. Yeah, you can say that. I mean, I went to bed last night watching the SpaceX rocket.
You did message me about that, actually.
You. Yeah, you were clearly in bed getting your beauty sleep at 10 o'clock last night.
I gutted because I would have loved to seen the egg on Elon's face as it didn't work. I'm all for, I love to seeing the technology. I love seeing, as Trump said, it grabbed it like a baby's, like you hold a baby. Yeah, last time. But he did.
When have you ever held a baby, like, not by the head? Because that's how it caught it last time.
Oh, right.
It kind of came in vertical, and it had kind of two little chopstick fingers that kind of caught it right near the top last time.
Which was incredible.
It's incredible, yeah. But they abandoned their chopstick landing launch yesterday, shortly after takeoff, because there was problems with wind at the landing site. So it was
Elon had problems with his wind?
Elon had problems with his wind, yeah. It was a purposeful abandon. But the rest of the test did go quite smoothly, so they're pretty happy with that.
But he had invited his new best friend along to watch.
He had a busy day yesterday.
So
I heard that there was reports overnight that he jumped on a call between Trump and Google as well. So there were reports, I don't know if you saw it yesterday, about Google potentially having to siphon off its Chrome browser as kind of part of this monopolistic tendencies. And Elon seems to be getting more and more influence within Trump's ear, and he supposedly jumped on a call with him. That's according to the information overnight.
Right. Well, that is his new role, isn't it? I guess head of Doge.
Head of Doge advisory. Yeah. Well, I don't know what he's doing, putting his nose into Google's business, but there you go.
Yeah, it's going to be fascinating, isn't it? That comes up in January, but before then, my girlfriend tells me we might have a change in Germany coming.
I thought you were going to say a change in a podcast host. I was fortunate enough to meet Rich's girlfriend at the Tasty event last night, and safe to say she's very lovely.
That's not been said before. I don't even know if she'd describe herself as lovely, but she was very welcoming to everybody.
Yeah, correct.
But she thinks that Schultz is about to go. And of course, just a reminder, December, I think it's the 16th, we've got a confidence vote in Scholz and his party. If they don't get past that, which it doesn't look like they will, then February there will be elections in Germany to vote in a new, well, what it would look like a coalition. However, the parties got to choose who they want to represent them in that election. And as early as this week, Scholz could be replaced with, remembering that we were in a very important time of negotiations with Russia, Boris. Boris is the leader of the head of defense for the German party, and he is thought to be the favorite in running to take over from Olaf Scholz.
Clarify which Boris?
Yes, he is Boris Pistorius.
Right,
So
right.
there's a
Because
real
I'm
mix of
instantly
backgrounds
thinking
there.
about 2 or 3 other Borises that it probably isn't, which would have
Boris.
surprised me. Okay, fine. So Boris Pistorius. And what does he stand for? What's the
Well, at the moment, I mean, they're still in the same party. It's just that he will be the Rishi Sunak instead of Boris, if you like, to go and run.
Gotcha.
So that's potential to come up later this week. We'll see how the German markets would take that. Scholz says he's staying, but of course they always do before they're about to go. Now, close at home, UK inflation data this morning. We've had that out at 7. It's not great news. So UK inflation rises to 2.3% in October. If we want to just take a quick look at the times there, then we've got higher than expected on the headline number. Headline number coming in slightly higher than expected, but we give you those exact numbers.
It was both the core and the headline was both higher. So the core came in at 2.3%, and the headline was 1.7.
And then, we don't worry. Look, the book, we've got it up on screen there. So the problematic number is that headline number, inflation year on year. The core number, however, in line. So the core gives us a little bit more. We can be a little bit more relaxed with that. But PPI coming in quite a bit higher than expected as well. So a quick look at what that's done to the pound. 127. It's taken us over there. With that, we're going to go to all the overnight action.
Let's do it.
Right, how did you see that market yesterday? How was it a busy afternoon?
It was a busy morning and a busy afternoon.
Right.
Because of course there was a few things that happened back to each other. We saw the sell-off initially on the headlines that Putin's updated his nuclear mandate, his nuclear doctrine, he calls it. So that was the initial sell-off. Then it bounced. So if I looked at the S&P, we did sell off initially after about 7:30, 8 o'clock in the morning. Then we bounced, and then we got the reports that Ukraine had used their long-range missiles, and then we really sold off because we thought that was going to be a proper escalation. Those two things were clearly timed. I think it was too obvious for them not to be timed. Those announcements.
Yeah, I mean, I guess that Putin and his team had it ready to go, and then the missile strike happened, and they immediately
just said, "Let's go for it. Let's announce it." But then what gave a kind of turn in the sentiment was the US saying that they weren't going to see that as an act of aggression.
Okay, what was it? I missed the exact term they used. I know they said they weren't going to respond.
Yeah, I got the exact headline for you here. It was, we won't respond, indicates it won't respond to Russian nuclear doctrine move.
So
and then there was also
not responding, it's like us having an argument and me not texting you back, isn't it? It doesn't mean that I'm...
Well, I don't think we're ghosting. I don't think it's the US ghosting Russia. I don't think it's quite the same. What I would say is, this is, we are Jake Paul and Mike Tyson punching each other in the ring. And Mike Tyson could have landed the knockout punch in the first round, but he pulled out.
Yeah.
And that's what that is.
Okay.
I think that's saying things could have got a lot worse, but we're not going to tool up. We're not going to go.
So what about today? Because it looks like Putin is going to launch a massive air offensive on Kiev today.
Is that right?
That's what's been spoken about.
I hadn't
So
spotted
then are the US going to respond? It's like... So the way I see it at the moment is this is just a lot of posturing, a lot of very nerve-wracking posturing because they know that they're both going to come to the negotiating table in the next 2 months.
Yeah.
So they've got to put out their strongest, look, their strongest force, really show the what is it, the grit of your teeth, the white of your teeth?
Yeah, I think it's the white of your teeth, isn't it?
Yeah.
Although it's not the skin of your teeth, because that's like you've just dodged it, but by the skin of your teeth. I think it's the white. No, the whites of your eyes.
The whites of your eyes.
The whites of your eyes. There were some other things though. Did you see the news on Iran as well yesterday?
No, I missed
So the IAEA, which I believe is something to do with nuclear energy, it's one of the big controlling bodies around the world. So upon a visit, upon an audit, Iran have agreed to stop producing near bomb grade uranium, which is positive.
Okay.
So that's positive. So I think we kind of got that midway through the US session yesterday. So again, another one of these headlines, whenever you start thinking about nuclear, everyone gets worried.
Yeah.
But I think, so I sent out a text to lots of the people that I look after yesterday. I sent them the text in the morning to say, this is the first headline. Then in the afternoon, I said, when the US said that they weren't going to respond, I sent that out as well. And so we got that kind of turn in sentiment. But what I thought was fascinating was 3 or 4 people separately sent me a text back. So they always try and buy the dip on any of these nuclear headlines.
Yeah.
Because let's be honest, if someone does press the button, it doesn't matter. They were saying you should always buy the dip. That's an
interesting risk management tactic, isn't it?
It is. And then I saw one of our analysts based in Tasty, Chris Vecchio, also kind of sent that. So there seems to be a thought that if you're, the market will always sell off on these types of headlines as an immediate reaction. Now, clearly the way that things played out yesterday meant that at least the immediate reaction was slightly overdone, and people saw that as an opportunity to buy into the dip. We saw Nvidia end up the day 5% ahead of results.
And this, actually, I got this from Vecchio as well, that the noise from Taiwan is that the overheating story is completely overblown.
The overheating of
Blackwell.
Got you.
So the reason why it was weak the day before, the noise was that it's unlikely to be part of the numbers or cause the numbers to be weak tonight.
Got you.
So you saw it, but an incredible 5% move. I mean, that was
huge.
Just.
I think just before I know I just said the word Nvidia, and I know we're all going to get very excited about it, and I know it's the biggest event of the day, I suppose, after the CPI.
Oh, it is.
But just to finish off on kind of the Russia story, Reuters reported at 6 o'clock this morning, said that Putin is open to discussing a ceasefire deal with Trump, but as part of that, he rules out making any territorial concessions. So it basically says, I'll ceasefire if you give me what I want. That's basically what he's saying.
Yeah, I guess, which we knew already, didn't we? But yeah, get them to the negotiating table before any more strikes and missiles go off.
Yeah.
If we take a quick look at that all sessions yesterday, we see what we're talking about, that 5% move taking Nvidia up to 147. Now, the expected move on the results tonight is 8% or $12.
Yeah.
It's already had a 5.5% move.
I know.
Before, so that actually took my my options position a little bit further out of play.
What's your position?
I put on a nice little. Let me see if I can just got this up here. Yeah, there we go. So remember it's at 147 now, right? So we've got. I'm long 2 of the 128 puts for this week. And then short 6 of the 115s. So my absolute peak profit would be at 115 on the dot.
Yeah.
So this is, this is on the chance of a real a miss on the numbers, a disappointment. It cost hardly anything to put on. I think it cost about $50 to put on because I paid 177 for, one contract and then received 3 times 46. So that's 138. So it cost me $40 per contract, so $80 in total. But the max upside is something like 2,500.
Gotcha.
So it's a lottery ticket on a
bad day.
On a bad set of numbers.
So I was looking at this, and so do you know what the market cap of Nvidia is now?
3.7.
Well, when I was looking at about 5, 6 o'clock, it was 3.4, so it closed higher. So it could be 3.7 now. expected move, and I just love when you get to these stocks that are so big, the numbers become so crazy, right? You've got an $11.50 potential swing on this move, which is 8%. That's $300 billion, right? That this thing could move, which would make it on results day the largest potential swing in a stock ever. Just in terms of, because of Nvidia is so much larger than it was in its previous results, it's going to be huge. Now, 300 billion is a big number.
Put that into perspective.
Let's put that into perspective. So if I was looking at the S&P 500 and I was looking at the constituent stocks ranked by their market capitalization.
Oh God,
what companies are $300 billion, I hear you ask? Salesforce, right? Salesforce.
A whole Salesforce
One
could
whole
be wiped
Salesforce.
off or added to Nvidia.
Bank of America is 350 billion. So 97% of that. Johnson Johnson, 366. Netflix, 367.
Oh wow!
Do you want to know? To give you some more context, what IG is worth in Nvidia terms?
Oh dear, because we looked at this the other day, and I said, how many cents of Nvidia's share price would it take to buy Boohoo?
Okay.
And it was 2 cents. So relative to the mighty IG.
So go on, actually, we can play that game.
So the FTSE 250.
Part of the FTSE 250, IG is worth 0.1% of Nvidia.
Wow.
So if at $147 times by 0.1%, that would be 14 cents.
14 cents.
Nvidia.
The things that Jensen could do, the godfather of AI. Imagine what you could do with some of that stock.
I tell you what, just on Jensen, I know we do need to move on. Fire up his LinkedIn.
Jensen's LinkedIn.
Jensen's LinkedIn. It is the biggest flex I've ever seen. So he was basically flipping burgers, right? He's put on one job flipping burgers, and then the next job founding Nvidia. It's the best, best flex I've ever seen.
Which was much like you. You've been a IG lifer, haven't you? What was your job before?
I was specifically before IG. I was moving furniture around from a hire company in Kent. Before that was a bar in Nottingham where I was at uni. Before that, back in Kent. No, it was my student union bar.
Right. So student union barman and furniture removal man to sitting in the seat.
Big.
Right here.
Yeah.
I mean that we'll get that into your nickname somewhere. Okay. Now here we are. We've got a whole bunch of you on chat here. Mark Carberry, my Scottish Aussie, Scotsman who lives over in Brisbane. He was at the Edinburgh function. Great to see you, Mark and Kirsty. Monkey Man, no need to say congratulations yet. There's no ring on my finger. We got Neil saying, rising inflation. But the interesting thing is that inflation number going to help cable, or does it put us in this predicament of increased interest rates in the future, causing UK growth to get scorned even more?
Well, you've also got, don't forget, you've had the farmers' strike. So there was a big part.
Oh, Jeremy Clarkson almost had a heart attack on BBC.
Yeah, I know. Having an argument with Victoria Derbyshire about farms and everything. Yeah. I was actually looking, I know we need to get onto the overnight stocks, but if you start breaking down what that CPI figure means, the majority of the growth in that CPI figure comes from housing and rental costs.
Okay, right.
Which is interesting because I've now long thought, as A, not an economist, and B, a bit of an idiot, that if you cut rates, that's going to lower. If you cut rates, you're going to lower everyone's mortgage costs. You're going to therefore lower, hopefully, rental costs.
So it's self-fulfilling.
So is it self-fulfilling? So I'm again, if you do know the answer to that, I'd love to know, because I still haven't been able to find out why that's not the case. Yeah. But food and beverage prices rose by 1.9%, which was up from 1.8%. So that's actually not a huge tick up. I do wonder whether these farmer strikes, though, could become similar to what happened in France.
Yeah.
That's something that I'm slightly concerned with.
Right, Neil pointing out that we've got 59 basis points of BOE rate cuts by the end of 2025 versus 64 before the stronger than expected. So there we go, the rate cuts being taken out as they have done in the US as well. We haven't looked at the US for a while. There it is. We're now basically 60-40 chance of seeing a rate cut in that December meeting in the US. So there's your indication of how cable's going to trade. we know what the probabilities are for, and then Neil's given us the probabilities of UK cuts. Also, we've got, away from the numbers, good morning everybody, Nvidia. Julian has focused on that, and Andrew McKell will be very happy to read your comment there. Right now, Goldman's have got a preview of the year out, which I've managed to get my hands on for you all. So let's look at Goldman Sachs Global Equity Outlook for 2025. The summary, I'll take it through as quickly as possible. Excuse the BBC Acorn type here. Now, valuation-driven returns are unlikely to repeat, so they don't think there's going to be a big move higher in the market, because we've had such a big one, basically, since 2023 October. Valuations, we're looking at a 20-year high for the S&P 500. So that's decoupled from bond yields due to the optimism about growth. In the US, we're expecting 2.5%, Europe only 0.8%, and the market drivers, that growth expectations are already high, right? It's already in the price, so that leaves limited room for further upside surprises. Now, the risks are that we've front-loaded all those returns. So the optimism about rates has driven recent gains, and optimism about the election, obviously, as well. That creates a risk of underperformance in 2025. And then they also worry about the concentration, which we've talked about for 12 months now, and it's never actually come to fruition. That, of course, the top 10 stocks in the US account for 20% of global market cap. So what do they think you should do? Well, look at cyclicals versus... sorry, this is not what you should do. This is the trend. Cyclicals versus defensives. They've outperformed. The Magnificent Seven's outperformed. They are recommending strategies including equal weighted S&P 500, right? The equal weighted, which you can find on the IG platform as an ETF. Luke's going to show you that shortly. And the S&P 400, which we'll go on to as well. Now, going back to investment strategies, they are telling you diversification, which is what we keep on banging on about. Avoid heavy concentration in mega cap tech. Focus on ETCs, which are X-Tech compounders. I haven't heard that one before. Goldman Sachs introducing that in their preview of 2025. So X-Tech compounders with growth profiles outside the tech sector. AI beneficiaries. So now we're moving on to phase 3, right? Phase 1, we've had the Nvidias and the AMDs. Phase 2, we've had those that benefit from the second phasing of AI, and now we're moving on to those third phase beneficiaries. Now, alpha generation, declining pairwise stock correlations present opportunities for active management. That's you out there. That's you traders can get much better returns from trading and looking at active management rather than just sticking money into your S&P 500. Goldman's are saying that is the strategy that's not going to work. You can't just buy an S&P 500 tracker and sit back and do nothing. You've got to be active. Valuation earnings expected to drive 2025 returned a low. Forecasts slower growth than consensus estimates. So GS thinking growth is going to be slower than consensus. And that equity risk premium, which we need to talk about. We need to give you a guide to equity risk premium because that is relatively low, suggesting equities are vulnerable to rising bond yields. Now, sorry to spend so long on that, but I think that's really important for a roundup. You know, when somebody like Goldman Sachs is talking about the whole year, that's what we have to bring to you people out there.
Yeah.
So, fancy a short break?
I mean, we've only got 5 minutes.
Yeah.
So should we get it out done quickly?
We'll do that. Right. We'll get a really quick short break. We'll be back with you for the open. 3 minutes. We'll be back. Oh, 1 minute.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the close button next to the relevant trade.
Welcome back to Opening Bell. One thing I just want to touch on that we were just talking about was Goldman Sachs.
That 3 minutes went very quick.
It went incredibly.
Producer Fred slammed in a 1 minute break. How exciting is that we come into the market open and we're straight back in?
But let's just define what X-Tech compounders are for everyone that's there. And
Very useful.
These are people that Goldman Sachs say will benefit from the megatrends that you just spoke about that are not specifically platform or tech companies. So a list of the top 4 or 5 that they've had: Eli Lilly, LVMH, Novo Nordisk, Hermes is up there, L'Oreal, Novartis. There's a list that are out there that if you run a quick Google search, Goldman Sachs, X-Tech compounders, you can find the list. But yeah.
Which I must admit, those two, Eli Lilly and Louis Vuitton, are two. Eli Lilly I bought, I sold puts on Eli Lilly the other day. Louis Vuitton, I'm looking to do the same. And what was the...
Eli Lilly, Novo's up there, Hermes, L'Oreal, Novartis. There's a long list. Nike are at number 11 on the list.
Yeah, Nike's going to come good at some point in 2025. I just wonder if they go lower first on that. A very last kitchen sinking. Right. We've... So...
We need to talk about stocks.
British Land looking up 2% pre-market.
2% pre-market. They've got profit that beat their estimates of 143 million. That's good. They have raised their dividend and they have reiterated their ERV guidance of between 3 and 5%.
Right. Chris Nicholson down 2%.
They have guided that their full year pre-tax profit is going to be towards the lower end of what they were expected, so down 2%. Hit me with the next one.
Miners market perform very dull. Oil majors market perform relatively dull. Sage looking up 2% pre-market.
So Sage, their numbers were fairly solid across the board. They've increased the dividend by 6%, and they've announced a new £400 million share buyback.
Now,
so they've also said that their revenue growth for next year is going to be 9%. So that's positive from them.
Severn Trent, the upgraded stock from last week. We bought it because it was weak on the election result as all the defences were getting killed. It's looking up 2% pre-market.
So what they've said is their first half revenues have come out 1.22 million with a profit before interest and tax of nearly 300 million. That's positive. They have raised their mid-year dividend to 4.2%. Sorry, they've increased the dividend by 4.2%. That's a 48.68 pence dividend per share, but they haven't changed their outlook. So what were they being called up?
They were being called up 2% as well.
2%.
So it's a relatively strong day. I mean, these are, the small stocks and the significance of the indices, but quite a nice set of results there. Right, what do we have on the broker upgrades? The Times is talking about Disney, saying buy Disney, would have been more helpful last week. EasyJet cut to hold at HSBC.
Yeah, I saw that one.
I'm not sure who that analyst is. I'll look that up on TipRanks, because TipRanks can give us that. Let's see how good they are. There's not a whole load of market moving.
The one I want to cover, just because it is currently in vogue, is a UK listed company called Argo Blockchain. They're a blockchain miner. They've said they've actually had a net loss in Q3, a net loss of 6.3 million. However, they have got 2.5 million in the bank, and the company also holds the grand sum of 4 bitcoins, which seems quite underwhelming for a Bitcoin miner. They're in discussions regarding...
Not quite MicroStrategy, is it?
It's not quite MicroStrategy. No, they've got
14% yesterday, by the way.
I know, incredible. They've had discussions regarding all of the mining equipment held at one of their sites, which potentially sounds like they could be looking to sell it. Do we have an early call on those?
Ben Buswell in the chat somehow lost money on Disney. How? How did you lose money on Disney, Ben? Tell us that. And Graby in the chat as well, joining us with 15 seconds to go till the opening bell. He's got it ready. Don't want to ding-a-ling it before. You haven't seen this yet.
I haven't seen it. This is new.
Yeah, so
this is very new.
I've got a thing to attach it to. But are we ready for Wednesday's opening bell? There we go. We need that.
Is it
It's
ringing?
not very loud, is it? It's not very loud today. Right, that's the market open. Dear me, what a disaster. Cam and Caleb in the studio today, people. Cam and Caleb, we turfed out Phil and Terence for the day, and we've brought in the dream team. Those of you that met producer Fred at the event last week, tell us. But there's your early moves. That's the ones that are open so far. Look, run us through what you're seeing there at the top of the leaderboard.
So we've got, so interestingly, Scottish Mortgage Investment Trust, they're up 1%. They are a FTSE 100 listed investment trust run by Baillie Gifford up in Edinburgh. But they've got about 5 or 6% of their fund is invested in SpaceX, which is interesting. It's a good way for people to get exposure.
Do they really?
They do. They are they're a forward-looking tech growth fund. Don't let their name confuse you, but yeah, they've got about 5-6% of
They got killed in 2022, though.
Oh, they got killed.
I kept on trying to catch a fallen knife there, and it was painful on the way down.
Yeah, luckily I got some of those in my pension. They got rabbited away.
Right, Burberry at 1.2. It got hammered yesterday, didn't it? Those luxury names got absolutely smashed yesterday, but Burberry regaining some of the ground today. We've got, not any of the names that I would have expected to see up there today.
What about our guys that have reported?
No trade on Sage yet. It's probably not up. To be honest, I probably don't have it on there. Anyway, so do you want to have a quick check on
let's have a look
those ones? Vodafone back at 71 pence, my friends. So got down to 67 at one point. What an opportunity that was on the day after earnings as the flush out occurred. In Europe, ABB up 1.2%. ABB.
ABB? ABB?
ABB.
ABB.
So that's the Swiss industrial company there. Kering regaining ground as well.
Let's keep an eye on Sage. Let's keep an eye on Sage. Indicated to be in an extended auction as they are indicating up 26%. So keep an eye on Sage. They are not open yet.
It's me now. That is a mover. Now, where are we sitting with British Aerospace? BAE. Now, I've been trying to get short this thing. And I'm not going to get the chance. I'm kicking myself last week I didn't get short that because Ange and I had a straight, flat-out argument on British Aerospace going up on the back of Trump getting elected. But I missed my opportunity there, so no crying over a spilt cup of coffee.
Spilt milk there. Where else do we look?
EasyJet down 90 basis points on that downgrade at HSBC.
We've got British Land. They are opened completely flat. Completely flat. Absolutely nothing going on there. So even though good results there, market is, no one's looking
So
at
relatively, what's the FTSE doing? Because it's a relatively quiet morning, isn't it?
We've got
British Land.
7 Trents off the back of their positive results there. They are up 0.6%. Looks like they opened lower and have rallied up off of 26.30. So keep an eye on those. We've also got BP. Where are BP on your list? They saw a downgrade today at Alpha Value with a price target at 402.
Down 30 basis points, 381, getting back down to that level. I've got to have a look at BP because I'm eyeing it up to pop that into the pension at some point. Now, of course, our Ukraine focus stock Forex, that's still benefiting from that Trump election, has moved from I guess it was more here, wasn't it? 62 pence post-election, now up at 77, but of course an unfortunate day yesterday with that news. So Forex up 1% this morning. Now the FTSE itself is just above that 81 level. So just above that 81 level. We've got Eurostoxx up 50 basis points and the DAX 40 up 60. So a bit of a bounce from yesterday.
Yeah, a bit of a bounce. I mean, what we've seen across the kind of macro index space is a bounce. Let's go to try what Vecchio says, and some of the clients say that if you buy a nuclear deterrent chat, because it doesn't matter either way, which it's a strategy.
Let's not push that as a
it's a strategy. Let's not do that. Use stops. That's a better. Yeah, use stops and limits. Sage now indicating to be open 15%, so not quite the 23 that we were thinking there.
Let us know if you've got Sage. I mean, that I honestly have not traded that. I don't think I've traded that once in my life. But please let somebody in the chat have it if it's going to be up as much as 15%. What I do have is HSBC. That you saw me buy that on the open yesterday for the chance of a breakout. They are relaunching their Premier service in the UK. They kicked me off that,
The Premier service.
I was in it in 2016 and I lost my job. Took voluntary redundancy from the mighty Credit Suisse, saw the writing on the wall.
Yeah.
And they kicked me off the Premier. Thanks very much, HSBC. But I'm ready. It's relaunched. Right, Sage is off and running.
Sage is off and running, up 18%. So that's now trading 1273, 1290. It's moving around. So it's now up 20%, really kind of coming off and off to the races.
So what did it open? Opened at 1207, and it's already there, up 22. Wow.
Yeah.
This is right. We need to get this up on the full screen. Let's watch this tick by tick. Who has it? Let me hear. That is. Wow, it's traded 1310 and 1270 within 30 seconds.
Yeah, let's just dive into their story a little bit more. So to give you a little bit more context on it, they've said that they've forecast their organic revenue for 2025 is going to be at least 9% ahead of where they were looking at. But the numbers that they banked today, their operating profit was 452 million. That's up 43% year on year, which is massive. Their operating margin is now just under 20%, which is positive. North America contributing well to these numbers. They've come out, they increased their dividend by a smidge, 20.45 instead of 20.44. The kind of in terms of what they've then done is the 400 million buyback, which I think is what the market's going to be looking at now. 400 million, what is the Sage market cap, I hear you say? I am going to find it for you.
Very good question.
Which is 12.8 billion. So what's that? 400 million is 4% of the company? 3%,
Yeah,
4%?
yeah, good math. Right, okay, so a 220 basis point margin increase. Yeah, so those of you that don't know Sage, it's accountancy software. It's used by millions of small businesses. So for all the concerns, about small and medium-sized businesses, nope, they good old UK software firm. Great to see it performing so well there. We'll keep you abreast of that one, but it did try and get above £13, straight back down to 12.50. So Argo blockchain down 6%, I'm told.
Argo blockchain, yeah, let's look at it. 6.3% down, trading around 8 pence. It is a micro cap, it is very, very small. But I think probably the market's reaction to their 3 bitcoins is probably the same as our reaction was to 3 bitcoins.
Underwhelmed. You've got 3 Bitcoin, don't you, Luke Murray, yourself?
Do you know, I did have some Bitcoin, but I thought it was a rock star. I bought it originally.
I like it some, because some isn't 2.
No.
Right? Some is more than 2.
No.
And I said 3, and you didn't confirm 3. Therefore, it's more than 3.
Well, I originally had some at 6,000. Can you believe that? But I sold it at 10. Thought I was a rock star.
Yeah.
I mean, it was back in 2017 when that first kind of run into 2000 was. So that was, what, 7 years ago. So I was in IG for 3 or 4 years before that. So, it was good money back then that I actually used to buy my flat with.
Yeah.
But yeah, God, if any one of you have listened to my podcast, Talking Shop, you would have heard the stories about my PA account, about some of the other guys' PA accounts, and that's one that is going to be the horse is bolted.
Keen to hear your Bitcoin stories at home. Please drop them in the chat. Ben Buswell, I don't know if people want to hear your story, mate. Shocker. That boy got wiped out in 2022, and I was unfortunately there in New Zealand to watch it.
To witness it.
He was not a happy boy. But he's now made it back on Upstart. Well done, Ben. Stick to the stocks, mate. Right, what have we still got left? We've got to go to FX and commodities world, because I was pointed last week that we don't give enough love to those FX traders, which is absolutely true. I took that point on board, so we're going to talk more about FX. The pound could not stay above 127.
No.
Right back down, 126.90. So yes, it's 10 cents higher than where it was on a quite considerably higher than expected inflation number.
It's a big data point. But the pound's been getting no love recently, because you're right, you know, you're talking about the forward expectation for growth under the Labour government. They've got kind of lofty targets, but the kind of fiscal picture at the moment doesn't seem to be, well, it's difficult to see where that growth is going to come from. But yeah, so it's disappointing to see the pound not really shake that off.
But it has against the euro, actually. So I take that back. There's a 30 cents move there in sterling euro, and we're at the 120 level.
Well, you look at the euro, pull up a chart for the euro.
Against the dollar.
Against the dollar.
That one then.
And it was something that I spotted this morning. It's been getting hosed, right? It's really been getting no love. But if you go back, I want to look back over the last couple of years, we've gone from what, 112 down to 106 now?
That's right, yeah, 105.70.
105.70, yeah, wild. 105 is massive, by the way. So if you zoom out, is this a daily candlestick? Yeah, if you keep going, we've got, where's that, 2023. We've looked there once. So we broke at the back end of 22. Then since then, you've got a bounce off it just to the right.
Yeah.
Just no, the text is in the way, but yeah, you're basically seeing it. 1, 2, 3, arguably 4 touches of 105 in the last 2 years. Sorry, in the last 2 years.
Yeah.
That is massive. That is massive. With Goldman Sachs.
If it breaks that.
Well, this is it.
Whoosh.
Last time I was on last week, I was looking at the notes.
Parity, aren't you?
Well, Goldman Sachs were calling for parity last week.
Right.
Calling for parity, which you can see. And the euro's just been getting absolutely no love post-Trump, post-tariffs, everything that's going on over there in Germany. Doesn't help.
Generally rubbish.
Yeah.
Now, the Japanese yen.
Japanese yen.
Back to that story, 155.72. That's a bit of a round trip as well, isn't it? Let's zoom in on this a little bit. How we've seen the day that we came in August the 5th, everybody's nightmare shudders at the thought. There is August the 5th there. And we moved aggressively 152 down to that 142 level. And we've made it all the way back up to before the Fed. Well, it was the July meeting. Obviously, was.
So it was when they started diverging in the policy, wasn't it?
Yeah.
So you had a lift in the States, and you had an increase in the yen. So therefore, the carry trade, the mythical carry trade broke. But it was only last week we were hearing calls around this 155 handle that the BOJ were going to step in, start to do something about it. We're right back up there. It's just a U. If you look, there was that big down day last week, and it's just a straight U back up.
I really hope they've traded it well, because they intervened at the 150 level last time, didn't they? So I hope they did some reverse intervention at 140.
Do you reckon?
Do you know
they could do that?
Do you know the Swiss bank? Right, the day that the peg broke in the Swiss euro.
Yep.
Right. So 2015, I think it was. Maybe.
Remember that day fairly well.
So obviously, Credit Suisse. Right. We saw a huge order come through the pipes right on the very second. So they did the intervention through our pipes at Credit Suisse.
Right.
And the size, I've never seen anything like it.
Just lift it a market?
Yeah, just boom. And the guys obviously looked at seeing the volume going through our systems before we actually heard the news.
Well, yeah, of course.
So
I say this to people all the time. The price moves first before you find out what moved it. And you can use that in anything in trading. The price will move first before you do everything. And I've got clients that are breakout traders. I've got guys that are momentum traders. I've got guys that are, range traders. we as humans want to fit a story to something because it makes us feel better that we didn't not know something.
True.
But the price is going to move. The price moves. That's where your P&L is. That's when your trade is going to be. It's where your limits are. It's where your stops are.
It's the most efficient mechanism for news, isn't it?
Yeah, the price moves first, and then everyone scrambles to find out what it was, and it's either a positive story or a negative story. Doesn't matter. The price has moved.
Right, so, well, let's have a look back to see if there are any of those this morning. What is the market telling you? The market telling you it doesn't believe that there's going to be World War III by every look yesterday.
No, not quite. Gold back into its uptrend.
Yeah, do you want to click on commodities there?
Let's stay on commodities. So I bought the dip on gold. I sold some puts, which were for a while looking pretty grim. But now they're looking a little bit less grim. So we are seeing a little bit of a move down this morning, actually. Interesting. So that's come off 1/3 in gold, but back to 26.23.
Now, Ursula messaged me on late Sunday evening, early Monday morning to say, and this is our gas trader. If you remember, we said hello to Emmy on Monday morning on her way to school, but her mother Ursula had gone all in on oil at 67.80. That was a great shout. First thing Monday morning. We didn't see much move in those oil markets, but now we're really starting to see, there we go, up another 40 basis points, $69.50 this morning.
Yeah, I did actually take a little look at our client sentiment at this at the moment. So one of the things, you had Monty on yesterday.
Yes.
And that was brilliant, by the way. He's some character.
He is. He's an absolute genius.
He's very, very good. But what he does very, very well is he does a great job at analysing where our client sentiment currently is, which, you know, if we happen to know, is a really fascinating thing to look at, because we know that clients at the kind of population level, retail clients, on average, don't make money trading. So if you can see where these people are positioned as a population, you could use that as part of your indicators. You can use that as a contrarian strategy. And what his note does very, very well is he breaks down when that works and when it doesn't. Yeah. So I'll give you the headlines today. Gold, we have a very heavy buy sentiment bias. So 70% of our clients are currently long in gold.
That's
so keep
interesting.
an eye on that.
And does it give us the week-on-week change?
It will do. Yeah, it will do.
Interesting to see that.
And they're also very heavy in silver. That's an 80% long bias.
Okay.
And 78% long on oil. So congrats to our guys that are, or our clients that are currently long WTI. Fantastic week so far.
Which I think is in the top 100 traders as well, isn't it? Isn't that
what it is on the top traders?
Top positions? Let's have a quick look. We had got asked yesterday, the Duke, our most classy, you know, this guy was a hero that we met last week. The Duke has the perfect name. That was his nickname. He was involved in the property sector. Now, yeah, he was asking where you find the top traders. So it's at the bottom of your app, the Explore button down here, try and not get that, and you press on the Explore, and then you just give it one scroll, and there you are, top 100 traders there.
Yeah, this is being developed as well. One of the cool things about the way that we're developing apps at the moment and developing product is more of these headlines, things that become more interesting, are now being surfaced more, if that makes sense. I'm not a techie, but I do love when little things tweak and develop on our app. So there's going to be more that comes from that space. So watch with bated breath, if that's the right way to say it.
Just to anybody who doesn't have the app at hand, we are long FTSE, guilty. Actually, no, I panicked out of that yesterday on the on World War III. Long Vodafone, guilty.
Short dollar yen. Short
dollar yen is interesting.
So
and the CAC 40 has just been added as a long. I know Anne's traded that against that yesterday, didn't she? So that's not, it's recent, but it's not brand new.
Well, it's up.
Yeah, short.
Well, the CAC is up 0.7%, 50 points this morning. So if you're following that, that's a very, very firm uptrend all the way through from the small hours this morning. In fact, if you'd have bought the US Open yesterday, you'd be sitting pretty on about 140 points worth of profit on the CAC.
That would be the wee hours, laddie.
No, the wee hours.
The wee hours.
And you know
why I come to that is because, and why I started the show this morning with a top of the morning to you all. There is our story in the Times. Why the Scots and Irish are best at sniffing out a fake accent. Now, Producer Fred tried to speak the Queen's English yesterday in his confirm and send. So I cannot wait to see the wording in the questions today, because I know he's not going to do it, make the same mistake again. But Celts and those from Northeast England are best at detecting when an outsider is mimicking their pronunciation. Luke Moore, I want to hear your best Scottish or Irish accent, pal.
My best Scottish or Irish accent. So,
you almost went for it.
I tried it. Well, my in-laws are from Aberdeen, so I should have a fairly decent Scottish accent, but...
Let's hear it then.
What do they say up in Aberdeen? Or the Doric, it's fit like and
You're right, pal.
so there's a friend of the family, and there's a kind of folklore in our family where the chap was going to play golf, couldn't get hold of his caddy, so he phoned the caddy and he got his voicemail, and he couldn't get hold of it because he was trying to get it. And the famous voicemail kind of recording is, "My name's Kenny, I'm your caddy, and I'll phone you back." And so that's always how I get into it.
That was a very Aberdonian accent.
There you go.
That was a good one, eh? Right, let's know your first world problems. If you can't get hold of your caddy today, then what if... the Duke is saying good morning as well. Very good morning to you, Duke. Hat off to you. Good bloke.
Good bloke.
Yeah, had to leave early because he had a dinner, but he stuck around to the very last second that he
Fantastic. There you go.
Right, now, talking about the Queen's English in our questions yesterday, shall we go to confirm and send? We have quite a lot of questions in the meltdown, nuclear meltdown yesterday that we saw for the few hours. So we decided to focus on that. So today's confirm and send is all about geopolitical risk and its effect on markets.
Let's do it.
Right, should we go straight in?
Let's dive in.
I'm going to let you take the first one, if that's all right, because I want to get the dates to put on the back testing.
Okay.
Right, so if you see me
squirreling away.
Doing. So there we go.
How does geopolitical uncertainty affect market behavior? From a broker's perspective, I think it's that word uncertainty. Okay, markets don't like it when they don't know what's about to happen. They don't. If we can value something, if we can figure out what the expectation is, you can roughly figure out what the price of something is worth. And that's what it ultimately comes down to. There are buyers and sellers that drive prices and drive markets. I think we often over kind of analyze and complicate. And I'm a big fan of Occam's razor. The simplest answer is most often the correct answer. Okay, so in markets, the only thing that is true and correct is the current price, and everybody else is speculating around that. So if you're going to try and buy something, you need to know what it's worth. And if you don't know what it's worth because of uncertainty, it becomes very dangerous to trade, which is what you saw yesterday. So headlines, you get Russia, Putin, and the word nuclear. That's pretty scary. Okay, so it's pretty scary, and it did it, and the headlines dropped.
So there's that emotional response straight away, isn't it?
There's an emotional response. I think what you're also going to find, and the way that the markets have traded more and more recently, is there are a lot of algorithms that will trade basis expected sentiment on headlines. So we call it headline risk on the desk. When there's a lot of headline risk, it's really tricky to trade because you don't know what's going to come out. So you said today there's a potential strike on Kyiv. Huge news. Okay. That's headline risk. We don't know when that's going to happen, if it's going to happen. We don't know what the fallout of that would be. Just like yesterday, we saw an update to the nuclear doctrine. That sounds incredibly scary. We don't know what that means. Then we see headlines. No, so initially we saw a sell-off. The S&P dropped. As soon as we then started to get a little bit more
to get you the minute chart of that yesterday.
Let's do it because you can see it quite clearly. So the initial headlines, and it was...
Well, we're scrambling around.
We're scrambling. I was watching yesterday. So I was working at home yesterday, and I always have you guys on the TV because, I just love it. But you were on my TV, and I could see you and Ronnie or Ronaldo that you keep calling him.
Yeah.
I think that one's... I'm going to try and keep that going on the desk. With you and Ronaldo scrambling around trying to figure out what was going on. And I'm furiously messaging you both on our internal messaging.
We need a red telephone here from a bat phone for you to give us, because at 8:41 you messaged me, and if we look at 8:41, that was that first sell-off, and it recovered. So there was a chance to to short it. And that's what I hate, is not knowing the news and being able to make a decision.
But do you know what it is? So you see the initial reaction lower and then the bounce. So when you start thinking about geopolitical headlines, you often see the headline first. And, you know, we're in a world where information is so quick and it is so easy to see things. But our attention span is super short, and so tweets are very short. They're shorter than news articles. So what you tend to find is the headline comes out, things move, and then minutes 5, 10, what you tend to see is then the commentary that comes with the headline. So we saw initial headlines of, you know, Putin nuclear update doctrine. You go, oh my God, that's really scary.
That's why the algos are so quick to hit the market, isn't it?
And they're going to sell it straight away. But then afterwards, the kind of commentary around it is, you know, we are lowering the threshold. We're not doing anything specifically today, but we're lowering the threshold in response to the tit for tat that we're seeing in kind of between the US and Russia. So as soon as the market knew that it was just an update to the doctrine and that it was they got clarity on what that update was, well, okay, you know, the market was happy to buy that dip, and you saw that. Then you saw headlines around Ukraine's missile launch. Now that's an active aggression. Okay, so what the first piece was bureaucracy. This is now an active aggression. You know, and we saw this at the start of the conflict in 2023. Yeah, 2023 as 2022.
That's what I was starting to look at was February 22.
February 22, because it was 1,000 days yesterday.
And that's exactly right. Yeah,
So it would have been roughly 3 years.
Yeah.
So 1,000 days. So now there's an active.
Come off the chart there. Thanks, guys.
So now we've got an active aggression, and we didn't know what the response was going to be. We didn't know if there was going to be a response. America was asleep, so we didn't get anything from the Americans.
And that was a big unknown, wasn't it, for those who were trading it? What on earth is Trump going to say? What's going to come out of Biden camp?
And that's the uncertainty piece. Then at just before the US Open, the US come out and said, you know, as we mentioned on the show earlier, we're not going to respond to this change in the nuclear doctrine. And now all of a sudden, the market says, okay, the US isn't going to then step forward and do anything further. So therefore, there's going to be no cranking up of tensions, at least in that immediate session. And then it was clearly pathway for the rest of the day to be bought up. It was bought up.
Which I guess, you know, Nvidia helped as well, didn't it? But if we look, was it February 22?
I think it was. Yeah, it was definitely.
I've got the exact date.
Definitely late winter, early spring. Because I remember seeing kind of snowy pictures. But yeah, roughly 1,000 days now. Well, 1,000 days yesterday for the anniversary of the start of that conflict, unfortunately.
Yeah. Sorry, I'm just quickly. Here we go. Yes. So March the 18th, 2014 was the Crimea annexation. So what I'm going to do, actually, let's jump on to the next question there, please, guys. And we'll see if we can pop a back test into that. So what strategies can mitigate geopolitical risks, right? And this is where I'm going to use this back testing. So let's go. March 2014 was the annexation of Crimea.
And just for the viewers that may not have seen this, because you're just such a pro on Tasty now. You spent a week with the big dog and you're just a pro on Tasty. We need to bring the viewers along with us. This is the Tasty platform, and what we recently launched was a back testing facility. So what you can see on here is in the top left, what Rich has plugged in there is SPY. So we're looking at the S&P 500 ETF, the main ETF. And what we're trying to do is then build out a strategy that you would have put on between start date and end date. And what you then get is all the ability to put on the conditions. So, Rich, if you want to talk us through what you're suggesting the trade would have been.
Yeah, so let's look at, so we're talking about a week before the annexation of Crimea to 2 weeks after, right? And do we want to buy puts or do we want to sell puts on that, do you think?
I would hazard a guess that you'd want to be buying puts.
Okay.
So that's a negative story.
And we're going to go for a 50 delta. So at the money puts with the days of 45 days to expiry.
And actually, another thing that, just to add on that, for the kind of not necessarily for people that are not necessarily as au fait with options, like I am learning in real time as we go. The one thing that I picked out of the Tasty tour last week with Tom is that the delta is also a probability that the option is going to settle in the money.
Which is very good timing, because we're going to look at that more in the market measures today.
Perfect.
So join us at 9:25 for market measures. But here is what happens if you bought 50 delta puts over that 3-week period. You lost 90% of your capital because the market is so quick to rebound, and we've seen it every single time. So what happens if we were to sell puts in the same period, right? Let's look at selling puts.
Which you would say is a market neutral or bullish strategy.
It's definitely a bullish strategy. And we're going to take that strike down to 16, which is the one that the Tasty guys talk about. So this is a market that goes down on the headlines and bounces in a geopolitical situation, geopolitical risk.
And then what we're also saying there, by picking a 16 delta, is you're saying there's a 16% chance that those settle in the money. So there's an, 84% chance that it settles out of the money, which is what you want as a seller.
So at the moment, that would be like selling a put down at the 5,400 level, with us trading at 5,900, right? So it is far away. You're getting a low premium, but your total profit loss there is $500. Only a 3% return on capital, and that's because it was so low. So I would imagine all we'd have to do is change this to a 25 delta, and we'll get some kind of better pickup there. Yeah, 4%. So this is the back testing function on the Tasty platform within IG. It's fantastic. It really is useful because you can go to any time period. Look at this. Post-pandemic surge.
They've pre-built them, have they?
They've pre-built these times. Inflation-induced bear market. Past 5 years, past 2 years. Tech sector mania, right? This is absolutely brilliant. And you can take any product, right? All the individual stocks. You can go through. God, that's endless, isn't it? Apple, Adobe firm, anything that you want to go through, and really useful.
So I think what's also really helpful there is for clients that are kind of engaged and are using our OTC platform, the spread bets and the CFDs, to then convert your knowledge into how to represent it within this backtesting is to look at sectors and look at ETFs. So if you were to look at, say, SPY, that's the S&P 500. If you wanted to look at the NASDAQ, that's the QQQ ETF. And then what they also have in there, if you go to X, scroll all the way down to the X.
Where, sorry?
Just onto the markets, go back to the markets.
Okay.
Yep.
Symbols here.
And then go down to X's. You get to X.
Oh, yes.
So XLF, XLU, XLE, these are XOM. Pop quiz, I'm not going to remember which one's which, but that'll be the utilities, it'll be financials, it'll be oil.
Energy, exactly.
And energy, there you go.
Yeah.
So if you want to look at specific sectors.
So if you want to find out how your portfolio would have done in the past when we get geopolitical risk, right? You can look right back to, I think it goes back as far as something like 9/11, or it doesn't always have to be terror related or war. It can be COVID, and you can put everything in there and find out exactly how your trade would have done.
It could also be earnings, right? So you could you could do something on Nvidia into earnings. I think it's beaten it's beaten 12 of the last 12, and it's rallied 8 of the last 10, I believe. I got the details here.
Well, that's an interesting. So, in what's next today, when you're back at your desk, helping all the clients.
Well, actually, just before that, so we have undershot the expected move 5 of the past 12. So only 5 of the past 12 have been outside the expected move. which I think is really interesting.
That is really interesting.
So we've got-
Remember, the expected move today
is 8% or $11.50, $12. So yeah, 5 of the last 12 have been outside. So therefore, as potential option sellers, you want to be looking at that expected move and then trading around those levels.
So yeah, 9:45 today in the what's next section. I'm going to take you through my predictions for the revenue number, for the EPS number, and how I've got to it, right? Because there is a pattern there. Jensen is the godfather of predictive AI. Well, he is also predictable on the way that he reports figures. So there's a pattern there. There's a whisper number, and I'm going to take you all through that at 9:45.
You've got to find his LinkedIn on.
Yeah.
Here you go. This is,
Yeah,
I've got it here. So between 1978 to 1983, he was a dishwasher, busboy, and waiter at Denny's. And Denny's is
Almost like you.
yeah, almost like us, like me. It's a diner, like an American diner style restaurant.
Let's see if we can get it.
See if you can get it up.
No, it wants me to.
Oh, you might get it. There you go.
Oh, yeah, there we
There
go.
you go.
I'll just take
Scroll
my,
down to his
messages
experience.
off. Right, experience. There we go.
Yeah, there you go.
Yeah.
Dishwasher, busboy, and waiter, 1978 to 1983. Took 10 years off and then founded Nvidia. How
Just
good.
Brilliant. Oh, he was at Stanford in Oregon State. There you go.
What's he got as his skills? Starting AI businesses.
Right, next question, please, Dream Team. How would you assess and monitor geopolitical risks, Luke?
So what we said about the uncertainty is exactly that, it's uncertain. So how do you monitor these? Well, you need access to a feed that's going to give you those headlines, okay? So I would recommend Twitter as a place to go, X as it is now known. I hate those people that say X, formerly known as Twitter. Have you seen those guys?
What a waste.
Yeah, what a complete waste. But so you want to be able to find an account that is fairly reliable and will be able to get headlines out pretty quickly. There are loads of them. What's really good is if you look at some of our analysts, Chris, Axel, they've got pre-populated lists that we have built that are people that are worth following. What we also have is an inbuilt Twitter feed into the platform as well. So if you look at the OTC platform, our spreadbet CFD platform, on the right-hand side where you get your trade notifications, you can also look at tweets. So that's going to be a real-time way of keeping
So
a
that's
track
on
of
the
these
platform?
headlines. It's on our
I've never
platform.
used that.
There you go. So if you just look at tweets, you get all of the tweets in real time through here. Now this is where I saw and tried to send you yesterday the news at 8:41. I just took a screenshot of that feed and
Right.
sent it over.
Oh, fantastic.
So this is a really good place. And this is a list that we curate and that we will continually update when we see people that are worth following.
And yeah, that's 8:37, 8:30. Okay, good. I didn't know that. Look,
There you go.
there we go.
There you go. So that's a really good place. Look, I think when you're monitoring geopolitics, I think it's worth, if you can learn a little bit more about the history around the motivations on why these things happen.
Yeah.
And this is something I'm learning more about, you know, with the kind of Israeli conflict with Palestine. There is years and years and years worth of history involved there, which gives that conversation a lot of nuance and motivation, and it's highly emotive. And that's what you tend to find with geopolitical issues, is it is very emotive for those individuals that are involved. And that makes moves more aggressive. I think what it also does is it makes the reporting of them really quite difficult, because if you get local news in one location versus local news in another location, you're going to get completely different stories.
I can tell you exactly. So 2014 to 16, I was running the emerging markets desk at Credit Suisse. So I had a hoot to Moscow that would let me speak to my 2 traders in Moscow, and I had a hoot to Istanbul that I had my 2 lady traders, big shout out to Cher and Eurus, there in Istanbul. Now, the day that Turkey shot down a Russian MiG over Turkish airspace didn't go down well. The Turkish currency instantly blew out. The market absolutely collapsed. The markets were open at the time. So, of course, I'm going through to Moscow and asking the guys in Moscow what's being reported on local news. And funnily enough, the Turkish television didn't even report it. Right. And this was a real potential for escalation. But the trading in the Turkish lira, the cross It's exactly that. It's having the best possible news flow at your fingertips as soon as you can get it, because it is really quickest finger first and the fastest to react wins. But you need the background knowledge. You need all the Erdogan story there when you're trading the Turkey. You need to take everything Putin and his second in charge, Alexei, I can't remember, but he was on the press conference yesterday. You need to take what they say with a pinch of salt. You cannot act when you're talking around Russia and things like that. You cannot act with emotion. You've got to be very attuned to what it's saying is just politicking.
Yeah.
And it's really a lot of saber rattling.
Saber rattling, yeah, which is one of Chris Beecham's favourite things to say. You know, it's just saber rattling. I think you also need to realise that what they're saying is in the context of what they are trying to achieve. Okay, they are trying to send a message not only to the people they're trying to talk to, but also to their own population. You know, if you're going to put your statesperson up and you're going to get them to say something, you need to signal that, you know, they are strong and that they are looking out for domestic interests, and that whilst they may shout loud, actually, if it's a deal trying to get done, you often shoot here and end up here. You know, we think this will all happen, no doubt, when Trump comes in January, that there will be a series of demands made on both sides, and then they will meet in the middle, and there'll be some form of deal that gets done, and we hope that that comes to, you know, towards peace. But it's tricky to keep a handle of if you don't have the context.
And the context is everything. Never trust the media. Never look. I read that the Guardian workers are going on strike today. Fantastic. 80% of the population will cheer that strike rather than others that do the strikes. But
it's also, you know, in a different sense, you know, the farmers, with the farmers' strike that we saw yesterday in London, Keir Starmer has come out and said that his views have been supported by the BBC. So if the BBC is now not impartial, well, as Clarkson quite rightly said, you know, this is the you're just a mouthpiece now, so you can't trust the media.
Yeah. Which is really worrying. But yeah, just watch those headlines, go straight and find out what the person has said. Like we said on that, the US, we're not going to respond. You know, what's the actual wording of it? Because wording is so important. Anyway, we have saber rattled enough, haven't we, Luke?
We have indeed.
We've covered a lot this morning. I'm glad I had my coffee before we came in. And I'm very sorry to lose you.
No, not at all.
Back to the floor.
Well, I'm going to be here once a week now. So that's all been confirmed, which is good. So I'll be here once per week. Hopefully I'll get a just a specific set of days, which is good. So then we can know which day I'm going to be coming on. So yeah, enjoying it. So thank you so much for having me.
Great. Now coming up next is Angeline's interview with Isar. So Isar, our psychology expert. I'm going to be sitting out listening to all of this, waiting to hear what he's got to say. But we'll see you. Go make yourself a coffee. Have a quick shower. The British Indian there, and yeah, we'll see you on the other side.
Take care.
Hi, I'm Sean Murison, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Trading the news is an essential skill for all traders. Major news announcements can often cause large price movements, particularly in Forex markets. So, here are 5 key pointers to help you try and make the most of those moves. 1. Do your research. Know the times and dates of important events. Use an economic calendar, for example, the one on IG.com. It's a vital tool to help you plan ahead. There are many announcements on any given day, and it's essential you know which will affect the assets you're trading. For a Forex trader, generally any event impacting the US dollar is important. Events like non-farm payrolls, Federal Reserve minutes, and GDP. If trading shares, look out for company earnings, dividend payments, and stock splits. 2. Check what the market expectations are for the event. Look at a chart of what happened last time. How did the market react? Was the data better or worse than expected? Did earnings beat or miss estimates? Use what happened in the past to inform your future trades. 3. Study related news and events. What else could impact the market in the wake of the announcement? Take crude oil as an example. US inventories are due on Wednesday. If there's an oversupply, the price should drop. But say OPEC ministers are meeting Thursday. If they reduce output, the price could rise. So, it's essential to look at the overall picture and not take each event in isolation. 4. Put a strategy in place. Know what levels you want to buy or sell at, and where to put your stop losses. This will help you to have the courage of your convictions and avoid knee-jerk reactions. And finally, 5. Learn when to fade the news. Here's an example. The CEO of Company X announces he's leaving. The stock falls, but you believe the company's fundamentals are still sound, and the market is overreacting. So you hold your position. If you're right, and the price rises, you could profit. Of course, if you're wrong, and the price continues to drop, you'd make a loss. Remember, these are all just guidelines. While trading the news can be exciting, it is also risky. Unexpected results can lead to high volatility in the market. So, make sure you're well prepared, and always have a solid trading plan.
Hey people, dirty dogs, we are back and we are with Istar, who is here with us to talk about the most exciting thing that's happened in the last 24 hours. However, you heard me also talk about this yesterday, with the reaction to, the news out of Russia and Ukraine, be disciplined. Istar, thank you so much for joining us.
Delighted to be here.
We got
I wish it was under slightly more positive kind of news.
Well, this is all good. This is all a learning space for everyone, including myself too. And we got tons of new trader friends who are listening in, especially after last week's Tasty event, which we were there. Yeah. So just give us a quick synopsis of what you do here for our new viewers.
Sure. So I am the head of organizational development at IG. So my background is I'm an organizational psychologist, which means I think about how different companies are set up and how that impacts the behavior of people inside of those companies. I'm also a trader and I like psychology, so we think a lot about trading in the markets.
Amazing. I need help on the psychology front. And lots of people have been saying, take out the emotion, take out the emotion. I know it's very difficult. So after yesterday's news, there was this reaction, and Rich and Luke were just talking about it, on air. But it seems to have subsided now. I mean, we've seen this many times before. Talk us through what you're seeing, first of all.
Yeah, so I think whenever there's war and conflict and geopolitical risk in the news, that actually kind of creates a bit of a heightened environment. I actually have a slide, I don't know if we can get that up on the screen, but there's actually three different things to think about. Yeah, exactly. And there's three different things to think about when you're thinking about how markets react and how individual traders react to kind of the risk of war. So I think what most people think about are these first order effects, the thing in the kind of first bullet here, which is about how risk premia have increased because there's kind of heightened uncertainty. how we might have capital reallocation where people will move money from maybe riskier or more exposed assets to kind of safer or maybe even defensive or even defense-related assets. And then actually, if war does ever materialize, then you have to worry about the risk of capital destruction as physical buildings or like different parts of the supply chain might be disrupted. I think those first order effects are interesting, but to be honest, they're less related to kind of my psychology background. I think the second two bullets here are much more where I think we can talk a little bit differently about this kind of topic. So herding effects are really interesting. So we know that when markets move, they tend to not move in a unsynchronized way. They tend to move, especially in kind of herding ways, where the market tends to kind of move en masse. And actually, there's really interesting research that shows two things, both of which exaggerate the herding effect in times of war or where war is being discussed. So the first thing is around the news cycle. And so we know when the news cycle is covering war specifically, as opposed to other geopolitical risk, there's heightened herding in financial markets. And so we can look at a paper that looks at that in a second. And the second thing we know is that if there is actually war, or if there is like a very heightened period of geopolitical risk, countries that are closer to that area of war are more exposed to these herding effects. And what's interesting about herding, as opposed to those first order effects that tend to just be directionally negative, is the herding is actually bidirectional. And so for assets moving either up or down, you might see those moves being exaggerated compared to what they would be in times where war is not being discussed, if that makes sense.
Definitely. And what's interesting too is that just taking a look at my charts here, if I may, you know, we've got viewers messaging in. James Bennett, thank you so much for messaging so early in the morning. And I agree with you. I think geopolitics, you know, should to some extent, yes, there is initial reaction, but then it tends to kind of ebb away as that initial herding instinct fades. And as you all heard me saying yesterday morning, I put on gold, I put on oil, but I said as well, anything you put on, take it off, people. Take it off before lunchtime, if not sooner, because just lock in those profits and make sure your position is not undefined. In times like this, right, Asar, it's very binary. And so I would say don't leave it open. Have your guardrails strictly in place. If not, watch it. And
I think, sorry, just on that, I think because of the herding effects, where there is a new bit of information that drops, the move following that information might be exaggerated. And so what that means is you have to, if you're going to take undefined risk, you have to be much more comfortable with the volatility swings of that, or the alternative is to maybe either downsize your positions or take defined risk that you're more comfortable with in the kind of heightened volatility market. That being said, you will actually now get paid like a good premium for selling volatility. You just have to be comfortable with two things: the fact that the moves might be exaggerated, the actual realized moves might be exaggerated, and secondly, the information might drop very quickly and the situation might change very quickly, and so you might have to monitor things slightly closer than you would normally.
Totally. Which brings me to the question, have you ever heard of MSB?
No, what is MSB?
So a lot of people think that I have remained in the United Kingdom, you know, purely because I was born here or purely because, you know, of something else that happened. The only reason I can exist here is because I spent a lot of time in Scandinavia.
Okay.
For some bizarre reason.
Sure.
Not by design. And then as a result, learning how to work there and work with the people there, they gave me such cool tricks. Like, you know, I was like, you guys all look so cool. You don't look like you're wearing very much, but it's so cold here, right? It's like -30. And then they said, and if we may, everything you wear has to be tucked in. Nothing can be loose. Your socks are tucked in, your trousers are tucked into your socks. Yes.
Interesting.
Everything has to be skin tight.
Yeah.
It's like ski clothing, just tighter. And you know, the double scarf. I've got a double scarf on.
So wait, what is MSB?
So MSB, back to that. Loving how the Scandinavians are super prepared.
Yeah.
So they've got this thing. If you whack up my screen, you'll see the MSB, which I keep an eye on. Now, this has changed this week, and this is a brochure that the government sends out to every household in the country, a total of more than 5 million people. And this was sent out on Monday. They're going to start even mailing out the printed version, right? You can get it in Swedish and English as well. So this is
just a reminder for our
yes,
viewers.
and for our viewers, for those of you that are not familiar with the MSB, this is a document alerting how to survive in a crisis or war. And this is from the Swedish Civil Contingencies Agency.
Yeah, so I think this actually relates to the third bullet we had in the previous slide, which is actually about how in the context of kind of this whole environment, you also have to be aware of how, as an individual, you're responding and how you're dealing with kind of heightened levels of anxiety. And actually that can impact your trading behavior, but it can also impact kind of just your general mental well-being and state. And that's something that I think also we just have to be super aware of, because when we are in that heightened emotional state, we might be making decisions that we wouldn't otherwise make. Whether those are trading decisions or kind of personal decisions. And so, and I think proximity to conflict is obviously very closely related to this anxiety level. And we know that actually, like Sweden, for example, shares a border with Russia, and there is...
Poland possibly could have a heightened state of anxiety too. So that's a really good point. As has pointed out, make sure you're aware of your own psychology and how sort of heightened it is. I mean, you may be trading here in the UK, but you might be of Polish descent, or you might have friends in Scandinavia, like myself. But also, you know, I keep this in view too, because, you know, lots of people like Andrew Duck and Julian out there, I believe it was Julian, asking me about, you know, how do you navigate if you're interested in defense stocks, right? Also, I keep this in view because if this is starting to escalate, they would know they're closer to the border, right? And so I'd be looking more at being super picky, either get the big ones or the, you know, those that give you specific surveillance software, or like even drones. I've got a watch list here if you want to whack this up of drones. So some of the key names that you may already know: Northrop Grumman, Boeing, Lockheed, but also Elbit Systems. Thales also develops that sort of technology. And it's key to see yesterday too, we have a really good example. If you look at the hourly chart, where my arrow, I've made a nice arrow there. Can you see that initial reaction and then it petered off, right?
I think that's exactly the kind of herding we're talking about, right? So when the news drops, you see these really exaggerated moves. And it's only kind of a little bit later do those moves kind of cool down a little bit. Yeah, you can see exactly the same thing in probably almost all of these different stocks.
Exactly. And I've put an arrow there. And also, can you see my yellow line, trader friends? Lots of discipline there, you know, because once I hit my yellow line, I come off irrespective and stand back for re-entry. Of course, we talk about herding. Today, of course, is a big day, SR. Nvidia is the elephant in the room. I know you've taken some heat off, so have I. Taken some off the table. What do you think is going to happen, and you know, how can we have our psychology help us as opposed to hinder us?
So I think I'm kind of glad you brought it to Nvidia, because I think Nvidia, I think one of the things that's really important about when you're in these kind of heightened environments where your kind of news implied volatility is higher, is actually that impacts things that are not necessarily obviously related to the war. And so actually, if you're seeing heightened volatility and you're seeing heightened herding, that might well be the case for a stock like Nvidia, even if Nvidia is kind of relatively uninvolved in the particular Russia-Ukraine conflict that's going on now. And so I think that in all likelihood, if you see a big beat or a big miss, you're going to see an even heightened move, maybe compared to what we would have seen maybe a quarter ago. I don't know what's going to happen, and I think the side effect.
I wish I knew what was going to
happen. Yeah, I know.
I took money off too, and I'd be lying if I didn't say there was a slight ache.
Yeah, so I also downsized my position in Nvidia, in part because I don't have a clear view. I think also there has been a lot of, I mean, we spoke about it in a previous episode of this, but there was, we spoke a bit about the FOMO, and I think feeling kind of post-Trump, there was this big rally, everyone kind of piled into stocks, and then there was a bit of a pullback, but there's still kind of a general quite high level of bullishness in the market. And I think if there is a beat, you could really see more people pile in the run up to potentially a Santa rally, but you could also see the opposite, which is actually, you could see the market being at quite elevated levels. And so I think in general, we were expecting quite a large move. I think with some of the geopolitical risk, there's a risk that it'll be even higher.
Yeah, and we looked at the options side of things. We peered into that, and trader friends, like I always say, use every single tool in your toolkit. You know, use everything that you have on the IG platform, including the options side as well. Peer into it, because I did that, and it's like 116% implied volatility.
Wow. Do you know what that translates to as an expected move?
In terms of expected move, it was like almost $7.
Wow.
Yeah,
That's
either
a lot.
way, right?
Yeah.
And so that could be big. And then also, I mean, we talked about this a lot, because we both took money off the table. And in fact, it pains me even more because I made an arrow, if you want to whack my screen. Where it came up. But the implied move of, you know, $6 to $7 either way. I mean, it could be anyway. We don't know. We truly don't know. I don't know. Do you know, Isar?
No,
Do you know?
absolutely not.
We'd be in the Bahamas if we knew, right? But also, the fact of the matter is, I'm hoping if it does end up becoming a big spike up, then maybe we've just missed out on this round, because I think, you know,
That's okay.
Yeah.
I think I've never lost sleep over taking profit, and I have occasionally lost sleep over not taking profit and then the move going against me. So I think in general, when we think about these kind of high volatility moments, these kind of single event based kind of moments in time that impact financial markets, I think we just need to be comfortable with our position size. And so like smaller positions, downsizing into the event, I think are all very reasonable. I had an options position, and so actually I was able to take advantage of the fact that implied volatility was heightened and sell for quite a reasonable amount. And that was actually great for me. And I think that's one of the advantages with options, is actually you don't need to own it into the event itself. You can sell in the run up when implied volatility is high.
Yeah, and I like that kind of, you know, Goldilocks, you know, 45 to 21. And then most of them don't even get to 21. You know, sometimes you manage the position way beforehand, right? But I also like the options front, because there are times when you look at a stock and it's like, it's doing meh.
Yeah.
Right?
Yeah.
And you still want to take a position. It gives you that ability, trader friends, to take a position, even though it's just either meandering or, you know, doing something that is not what you expected, but is outside of that zone. So you end up with a straddle or a strangle. We have 3 more minutes, SR. I guess all our trader friends are waiting with bated breath to see, from your perspective, how you're going to deal with Nvidia post earnings.
Yeah, that's interesting. I think
I know you still have a position, right?
It's a much smaller position. Yeah.
You.
I think, yeah, it's interesting. I think I will wait to see what the earnings actually looks like, because I think we're in an environment where quite a lot of growth has just been priced into the stock. I think you're seeing some negative news stories around places like SMCI, who are a big Nvidia client. So I think I'm a bit nervous here, actually, given how much has already been priced in. I think I might be a options seller, actually, in the right environment. Especially, I might be selling, for example, call spreads, because I think I'm not sure how much room to move upwards actually there really is. But it depends. If they blow out earnings and they do really, really well, then I think I would have to like rethink that strategy.
I might be looking at AMD actually, just because, you know, this is the daily chart here. I just think it's, you know, been
as like a pairs trade or a single position?
Because it's been beaten down so much. And if I had to go in and have it as a pairs trade, I think it's down off the top of my head some 3% so far this year. But I know that it's putting a huge amount of money into AI development as well. And so it's just, you know, it's
interesting. At Tom's event last week, one of the things I liked about it was he was talking about how when he was in the pits doing options, selling, he had to take the other side, and so then that kind of trained him to be kind of a anti-consensus,
Yes.
counter-consensus trader.
Yeah, he's a contrarian trader.
Yeah, exactly. And I think if you look at AMD, I think a stock like that has been beaten up. I think there's a bunch of stocks like that actually have been beaten up quite a lot. And so thinking about thoughtful pairs trades, I actually think is a great strategy to find value in the market at the moment.
In fact, I do have a contrarian trader friends that you saw me put on yesterday. Let's have a look. It was,
What is
I agreed with Tom Sosnoff at the event. I thought that Chinese stocks had been too beaten up.
Yeah.
Right? Too beaten up. And here we have China A50. If you knock up my chart, as I said to all of you, always understand when you are going to come out of this. And I'm going to come out of that now because you saw me go on yesterday. And I'm kind of very happy right now. I'm looking at the daily chart, also checking on my 10-minute to see where we are. As you can see here, I have a stop at 13317, and it's starting to kind of lose momentum there. So I'm just going to take that and close out ahead of Nvidia. There we go, submit. So we are out of that now. I did remind everyone though to make sure that you have, even in spread betting and CFDs, and this is a trick that I stole from Tasty. You can tell the Tasty guys that. So I put on my chart now DTE,
Yeah.
date to expiry, but in my
as like a
mind,
mental.
yeah,
Yeah, that's funny. Yeah.
So it could be one session, it could be a date. You know, you hear Rich talk about Vodafone, it's like 7th of December, it's another key date. But in my mind, I know when I have to come out of it.
Interesting. So that is a great example of, well, I think we've spoken about it on the show before, but a good way of generating emotional distance
Yes,
between you and the
strip
trade.
out the emotion.
Yeah.
One really quick one, Adam Deleuze, who is a premium client of ours, asking, Issar, do you base your decision on exiting a position on price or more on fundamentals?
Ooh, that's a good question. I think when I enter a position, I normally have a thesis and I try and write down what I call success or kill criteria that might be price related. It might be to do with the fundamentals or the thesis. I think on a shorter time horizon, I'm more price oriented. And as soon as I start to look more medium term, I tend to be more fundamentals based. So for example, I have a long natural gas position that is kind of more medium term. So it depends a bit on the position, but I try to set it out in advance.
Amazing. Thank you so much, Issar. We'll get you back to talk about that. And thank you for all the questions. I know there are a few more, but we have to go to break right now. But we will be back with Issar next week.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade and make informed trading decisions.
CFD trading is the buying and selling of CFDs, or contracts for difference. As a derivative product, CFDs enable you to trade shares, indices, Forex, commodities and more, without ever needing to own the underlying asset. When you trade CFDs, you trade the difference in the price of an asset from the point at which the contract is opened to when it's closed. As you don't own the underlying asset, you can trade markets that are falling as well as those that are rising. So, how exactly do you trade CFDs? Each contract has a buy and a sell price. Sell prices are slightly lower than the current market price, and buy prices are slightly higher. The difference between the two is referred to as the spread. If you think the market will rise, you would buy. This is called going long. If you think the market will fall, you would sell, known as going short. The more the market moves in the direction you predict, the larger your profits. If it moves in the opposite direction, the greater your loss. CFDs are traded on leverage, which means that you only need a small deposit, known as a margin, to gain full market exposure. So, if you wanted to open a position equivalent to 500 Apple shares, you might only need to put up 20% of the cost. Your profit or loss is calculated based on the full value of the trade, however, which could mean magnified gains, but also magnified losses. So, when trading CFDs, you should always keep an eye on the potential downside. Take care to manage your risk with stops and limits. Visit IG Academy to learn more.
Hey trader friends, welcome back, and we are live from the trade desk with our favorite. Can I tell them your nickname? I love it. I love it.
Which one? Which one?
Which one?
And don't say favourite, because Ronnie Agnew will get really jealous.
Luke Mini Cooper.
Mini Cooper.
Mini Cooper is here with us, people, and you heard about his wonderful cooking last few weeks ago. And I was so impressed that he came on and said he was learning how to, cook special dishes. And I thought he was going to try something, quite easy at first, but he tried possibly the hardest thing in the Italian cuisine. It is like, it looks simple, but it's not. So you tried a carbonara, was that right?
Yeah, but
He did it properly too, with the little bits of, pork fat, and you didn't cook.
Charlie.
Yeah, you didn't. I asked you about the eggs, and you said no. I don't even cook the.
Yeah, you've got to take it off the hob, because otherwise they'll scramble.
Yeah, so I was like, whoa, we're dealing with a pro here.
No. That's like my signature dish. That's like one of my few dishes which I know how to do. But I'm trying to like.
And then you proceeded to tell us how you threw out the curry, or half the curry.
Yeah, that was awful. I haven't actually tried that again, because what I learned with talking to my colleague Sam is that I've got to like do the onions. I've got to then basically make a sauce out the onions, which does like a base for the curry, whereas I didn't do that before.
Okay.
So I didn't really have a sauce, and it was quite dry.
Okay.
But yeah, I was trying to go healthy, using spinach and potato, but it didn't quite work out, unfortunately.
I think you went too healthy. Maybe that's why. Have you tried anything new recently?
I haven't, no. I'll try something new. Well, I did a stir fry like a month ago.
Okay.
That was really good, because I got like 3 or 4 of my 5 a day in one dish. So I was really, really proud of that. Seriously.
Right. So the other thing that we found out recently about Luke Mini Cooper is the fact that you're also really into alien. Like, let's specify here, not aliens, Ridley Scott people. We're talking about alien.
Well, I like watching stuff on YouTube and Netflix with respect to it. So, as an example, I like watching like documentaries where it's a bit odd, where people are saying they've been abducted by aliens, and like they like tell their story. As an example, one lady said how she'd been like microchipped.
Whoa.
Yeah, like we would do, let's say like a lion or tiger in the wild, just to track their activity. She's basically saying that they've done the same to her. So I do think it's very, very interesting as well with like UFOs and like fighter pilots, basically explaining how I've seen like these tic-tac objects flying at the ocean. They've gone from 28,000 feet to under the sea in 0.7 seconds.
Wow.
So yeah,
Don't tell Rich I have microchipped him. How else will I know who's in what time when? Right. Speaking of which, you have a view on cable, which we just had numbers out of the UK. They were better than expected, weren't they?
So CPI rose 2.3% year on year. expected was 2.2%, and the last number which came out was 1.7%. So that's higher than the Bank of England target, which is 2%. We saw cable rose and it came back off. As one would have thought, UK base rate at the moment is 4.75%. With higher inflation, it would basically mean that the BOE are less likely to reduce these rates as fast. But it just seems to have, pound seems to have got stronger and then back to where it was, surprisingly.
I'm glad you say that, because this is a reminder for me to take a look at my cable trade, which I put on yesterday as well, punching up my screen here. It's currently up money, £4 a point. And I have got quite a view here that perhaps I should start coming off at around 12689 on cable, but I'm just going to leave it cooking for a bit at the moment. For those of you watching at home and you want to see what I've got on at the moment, the cable trade, which I opened yesterday, opened at 12668. And with a stop at 12,599, and my limit is at 12,787. So I've got stops in there. I've got BAE Systems in play as well, and Hensoldt. Those are more longer term. But I think with cable, I'm going to exit now because I'm pretty happy with that, and we already have that CPI number. So there we go. Click submit. £48 in the pocket there, because I don't want to have to look at that anymore. We've got the CPI number out, so no surprise anymore, right?
On the CPI, I was doing a little bit of research, and each year to measure CPI, they have like a basket of goods. So those more popular goods which consumers would purchase. In 2024, they added air fryers and edible sunflower seeds.
Edible sunflower seeds?
Yeah, edible sunflower seeds. So I was quite shocked about that. And they removed hand gel and bakeware.
Okay, that's really interesting. Hand gel, I guess, because after COVID.
Yeah, but I guess that was
What's
long.
the other one?
Bakeware.
Bakeware.
Bakeware, that's what it said. So I assume that would be like a baking tray. You know, like those cupcakes.
Yeah.
I don't know the exact
Interesting.
terminology for
Maybe
it.
that's also a COVID-related thing.
Yeah.
Who knows?
Yeah.
Lockdown, right?
Yeah, so
Lots of
they got
people
rid of
doing
them.
crazy baking. Wow, interesting. And penguins, are they still in?
Penguins.
Love a penguin. You know.
Oh, it's in the penguin chocolate bar.
Yeah.
Oh, that's a right throwback.
Always in the basket.
Oh, I haven't seen them in the shops for years.
They still exist.
Oh, okay.
And the sad penguin jokes, which I love very much. You know, behind every wrapper. You
No,
know,
I can't remember. I had these like years.
Oh
and
my
years
goodness,
and
we
years
have
ago.
to sort this
penguins.
out. Yes, there's always a really
Years
sad
ago.
penguin joke at the back of each wrapper. Like, you know, what's red, black, and white? And it's like penguin sunburnt. You know, that kind of thing.
Yeah.
It's really, really, it's like a cracker joke. So, right, we got cable. What else? I mean, it's also, of course, a big day. We can't seem to get enough of questions about Nvidia, but we'll park that for later.
Yeah.
You're looking at some others as well. I believe Sage is one of them.
Yeah, so we got Sage Software Publishing Company, done very well this morning. Announced a share buyback of up to
look at
£400
that.
million.
Woo. It's
Yeah.
up 18%, trader friends. And let's just have a look at the 10-minute chart to see its progress there. Still slightly edging higher as we speak.
And the adjusted operating profit was £529 million, whereas estimates were just over £505 million. So £24 million greater than expected.
You see, the thing with Sage is that I think, you know, it's got a good business model, and also the fact that it's continued to improve its margins in what I consider a very difficult market.
And that share buyback does show confidence.
It does, doesn't it?
Yeah.
And you know, the fact that, you know, let's be honest with ourselves, it's not the easiest of times in business.
No, definitely not.
So I kind of like that. I mean, it is reacting because of not just the buyback, but also 6% increase in that full year divvy. Quite something in these times, especially after the Rachel Reeves budget. Tom Roberts loves Rachel Reeves.
About that.
I'm being sarcastic here, because I told him that sometimes she's seen in my hood, and he was like,
Your hood.
yeah, sometimes in my neighborhood. Right. Next, Britvic.
Oh yes, we had Britvic.
Right. This was also, I believe, a lockdown darling. Let's add that to my workspace, giving you a daily chart here, trader friends, of Britvic.
They're behind Robinson's, J2O,
Yeah.
and Fruit Shoot.
Yeah.
That's what I used to have when I was young. Fruit Shoots as well. Blackcurrant.
It has to be the blackcurrant, right?
I haven't had them in ages either. I do miss them, but I feel like I'm a bit old to have a blackcurrant Fruit Shoot now.
Oh, I've got some at home. I'll bring some in for you. I've got 2 kids, so we always have that kind of stuff at home. And also, it's a bit of nostalgia, isn't it? I don't
know if I could have it in the office though, a Fruit Shoot. I think I might get a few funny looks.
Don't worry, I'll put it in a cup, and you can Don't be a rebel. Just have it. Just have it on the.
I can have it in here. Then no one will judge me. Apart from the people watching.
You know what? No, even the people watching, we don't judge you, do we, trader friends? Right. Looking at Britvic, this is a chart that is quite something, and I'm going to go out to the monthly chart because there's a reason for this.
Yeah.
Britvic has held up pretty well, and especially around that 2020. Remember when COVID hit? There were several darlings out there, right, that did really well. So you had the Deliveroos.
Yeah.
You had the, everyone's stuck at home. So you had the fever tree. Everyone's going like, we're going to like try, mixing everything, right? It went from, oh, we're going to be stuck maybe for a month at home. It soon went to 3 months, and then
No.
yeah. And there were crazy stories of, people having these secret parties. That wasn't my household, by the way. With lots of drink and it's like illegal parties, whatever. But Britvic was one of them. And if you look at the 2020 period, from around that March period all the way up to 2021, it did very well. And if you caught that along with the, Deliveroos, along with the Fever Tree also did very well because it was that mixer and gin in lockdown made that comeback, right? With all the funky flavors. Do you ever drink gin? I love gin.
Not really. Mainly rum for myself.
Oh, I like rum too. Do you know why sailors, if they had to choose one drink, it'd always be rum? Go on, trader friends, do you know why? In the Navy, sailors, they would always give out rum, or, you hear about pirates, you hear about rum, you don't hear about the gin or whiskey or anything else like that. Anyone? I'm just looking at the chat right now. Rich McDonald, a Scottish person, no whiskey as well, but you would carry in the ships barrels and barrels of rum. And it's because it lasted the longest.
Okay.
Yeah, it wouldn't go off. So
Could it taste the best?
I do love a chocolate rum cake. So yeah, and I think, Britvic taking...
On Britvic, I was just going to say in July, Carlsberg basically offered just over £3 billion to take over the firm. That is currently being looked into by the CMA, so the Competition and Markets Authority, and there is due to be an announcement on that on the 18th of December. So this AM, we haven't really seen much movement on it. However, in July, when there was this announcement, the Britvic price shot up. And in addition, on December the 18th, there is likely to be a lot of movement, whether that be up or down, based on the CMA's outcome.
Yeah.
So as an example, if the CMA say no, then Britvic's share price is likely to go down.
That's right.
And if they say yes, then it may go up further.
That's right. And that, I completely agree with you. That, I think, is more potentially a short. However, Britvic and many of its peers as well, much of this has been baked in because if you look at the big drinks makers, they're trying to diversify, trader friends. They're trying to diversify because the whole, you hear me talking about this, year on year, the whole light, now if I have a party, it's actually, I'm freaking out about the zero stuff that goes first rather than the booze stuff. I'm firmly in the booze camp, people. Just saying that the zero stuff makes me really ill, especially that Lucky Saint one. But this is part of that whole light. Everyone's going to the light, right? And we know that the younger generation, much more responsible. They're also going like Luke here, like Winnie Cooper, also, having healthier habits. They're going to the gym more, and all that feeds into this diversification play. If you trade some of these drinks, brewer stocks. Right, Palo Alto.
Yeah, Palo Alto, they are reporting tonight. Big in the cybersecurity industry. They've done very well recently. Shares have rallied 31% year to date, and in the last 5 years, 394%.
This is the weekly chart, people. Take a look at that. It is really something to behold there if you're looking for a very strong uptrend. Showing the monthly chart as well, because that will give you a better idea. You one lucky bunny if you got in at 2017. I mean, take a look at
You'd be
that.
laughing.
You'd be laughing if you put everything into this. Let's see if we can get a measurement for you. I'm still not great with doing this without a mouse, but because I need essentially two laptops here, one to chat with our trader friends and one to do this. I don't have the mouse operational, but you know, it's a real climb. Do you think that perhaps we've seen the top? Is it looking toppy yet?
I wouldn't say so, not for the tech stocks at the moment, particularly due to the fact that Trump's in. I know that you could argue that it's still priced in, but I still think that there is a way to go, and we would see further appreciation in the price, not just of Palo Alto, but other tech stocks as well. Out of interest, what's our client sentiment feature saying with respect to how many clients are long and short on this?
Here we are, client sentiment, 87% long, trader friends. This is our client sentiment, which you can only get here in IG. A reminder, this is a reflection of IG clients. So 87% of our IG clients have a long position, 13% short. What I find really useful, Luke, is also the right-hand side, because I like that last hour function, right?
Yeah,
if I'm trading this near term, I want to see what the change has been in the last hour. And you can see here 50% buys and 53% sells. So quite an almost even split there.
Yeah, it's particularly useful when there's a lot of volatility. As an example, would be tonight when Palantir and Nvidia are reporting. Another thing I just wanted to say is tip ranks. Tip ranks just up there. There you go. Really useful. Analyst recommendations, a little bit of additional research on the equity, and it's something I'd highly recommend to clients to have a look at before they place a trade.
Yeah, and also what's useful about this is it gives you very easily the smart score on the side, and even more importantly, you know, the top score since, which I find very useful because it gives you an idea of how long investors have been bullish or bearish, right? Some of the key ones here that you would expect to see: Nvidia, Meta, Alibaba. But also, we've got China Construction Bank here and also Royal Bank of Canada. I've never really traded Royal Bank of Canada. Right, so let's have a look at, of course, the elephant in the room now. Are you tired of talking about Nvidia yet? Oof.
Sort of. I love it really, though.
I love it as well, because I'm also, I've got a long position on this. I've taken some heat off the table ahead of this, and just whacking up my chart here just to show people where I came off. That arrow there easily tells you that level. What is your expectation, Luke?
Well, out of the last 8 quarterly reports, 7 have beat expectations. Therefore, on that, I think it's going to be a good outcome for Nvidia. What about yourself?
I think that if we looked at the implied move, we're looking at about almost $7 either way.
Yeah.
116% volatility. Check that on the option side yesterday. And also for those of you who haven't caught it, watch Rich's TikTok on Nvidia. Extremely insightful and useful as well, ahead of today's results. Look, I mean, this has been on a tear since. If you put all your money in Nvidia, and this is the weekly chart, people, since 2018, you'd be laughing. You wouldn't have to work anymore.
You'd be retired.
Yeah, unfortunately, I didn't do that. I diversified. And so my thoughts on this, I did diversify away a bit because I think tonight's event is very binary. And so I took some money off the table. And even if I miss that, 6%, if it's a gain of 6%, $6 or $7, then, I think it's fine. I'm okay with that.
I mean, even if you're not trading Nvidia, even if you're trading, let's say, the S&P, it's still going to have a big impact because Nvidia has such a large market cap.
Exactly.
It's a market cap weighted index.
Yeah. And on that note, we're going to have to go to a break. But thank you so much. Lots of people messaging in to say it's been such a pleasure having you on. And also, you taking us through Sage, Britvic, Palo Alto, and Nvidia as well.
Corporate earnings reports are quarterly reports that reveal the financial results of a public company. They include valuable information such as revenue, net income, and earnings per share. Investors can use corporate earnings reports to gain insight into a public company's performance. They help investors decide whether it's time to buy, sell, or hold on to shares. So, how do corporate earnings reports impact trading? 1. They affect market indices because indices are made up of publicly traded stocks. Index values go up or down based on stock price movements tied to company earnings news. 2. Corporate earnings reports can signal a healthy or unhealthy economy. They could influence central bank decisions on interest rates and monetary policy. 3. Unexpectedly positive or negative reports have the potential to induce volatility in the stock's price and prompt activity in the market. 4. This surge of trading activity could result in more liquidity. It becomes easier to enter and exit trades when there are more active buyers and sellers. However, increased volume can also introduce greater unpredictability and price swings. 5. Positive reports can bring in foreign investment to a country's market. Negative reports could make foreign investors less interested and reduce their involvement. 6. An earnings report has the power to sway how investors feel about a company or the market in general. How an earnings report impacts the price of a stock depends greatly on what investors expected. If earnings exceed estimates, the price tends to go up. If earnings disappoint, the price often drops. Meeting expectations is key. Even good news might sink a stock if investors hoped for better news. Likewise, a stock could jump if bad news wasn't as bad as predicted. So, how do you trade corporate earnings news? The challenge is to work out how you might react to news that will thrill or disappoint investors. Have an action plan in place for earnings that exceed expectations, or earnings that might disappoint. There is also a chance that the earnings might be exactly what the market expected, and there won't be much price movement at all. Keep in mind that the market can be unpredictable, and these changes can happen in a flash. Option strategies can allow traders to trade big price swings in either direction. Strategies involve buying both call and put options on a stock prior to the report. Call options can protect short positions from rising prices, while put options can protect long positions from falling prices. Finally, it's essential to have risk management practices in place, such as an airtight trading strategy, stop-loss orders, and portfolio diversification. Consider bird's-eye view factors like industry trends, the health of the economy, volatility, revenue growth, and trader sentiment. With preparation, agility, and risk management, you're on your way to trading corporate earnings news effectively.
Hi, I'm Sean Murison, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Welcome back, everybody. The Dream Team back together right in time for your market measures today. This may be Ange's favourite ever market measures. Why is that? Because
is it expected move and which direction? Sahil's given us the direction. Something I've been asking for a very long time. Don't give me the cone, Sahil. Don't give me the cone. Give me the expected direction. Is it up or down? And
where's the off button?
Sahil was like that. Sahil.
Can you control Angeline's mic from the...
Sahil.
Right.
I think Sahil edged back in Chicago when I was like, I love the cone.
Right. I'll tell you why, Ange. This is your favourite one. If we want to get up the screen, you'll show. Today we're looking at the probability of touch, whether your puts and calls get to those expiry levels.
I love this.
So, Sahil smoking some pot, the probability of touch indicates the chance that it's legal across there. Right, let's start again, shall we? For the sake of the YouTube cutaway. Ladies and gentlemen, welcome to Market Measures. Today we're looking at the probability of touch, puts and calls. The probability of touch indicates the chance that an options price will reach its strike price before it expires. It's useful for premium sellers focusing on price movements. So generally, right, and this is a really good rule of thumb, the chance of the option getting to the touch level, right, the strike price, is about twice the probability of the option being in the money. So if there's a 20% chance of the option finishing in the money, the delta, right, if the delta is a 20%, 0.2, the pot should be close to 40%.
You had me at pot.
So that's it, your delta and your pot. Pot should be twice delta. Simple as that.
Ask later on, not now, the explanation between the 20 and the 40.
Absolutely, yeah. So what we're saying is that if the delta's 20, the probability of the stock actually touching that level is double the delta.
Okay.
Okay? Mm-hmm. So delta's 20, the pot would be 40. Now, it's just the probability of it reaching it, not expiring there. So we've known that the probability of profit often overstates the realized success rate. Is the theoretical pot similarly overestimated? So to find out, we've analysed 45 day to expiry, 10 delta puts and 10 delta calls from the following underlyings. Those are, and what 5 underlyings are we testing today?
45 days to expiry, 10 delta puts, 10 delta calls from the following underlyings. SPY, QQQ, Apple, Amazon, Microsoft. All positions were held to expiration.
So the pot of these 10 delta options should be roughly
20%.
Exactly. So if the 10 deltas should be 20. Now, we've found that the actual probability of touch for these puts is much lower than expected. It's only half of the theoretical pot. So the pot on puts is lower. Why is the pot on put lower? Well, of course, the market has gone up generally for the past 15 years. So the actual realized level is 7% on the SPYs, up to 11% on Apple, but the average is only 9. So we expected that to be 20. However, the actual pot on the call side with the same delta is much higher, right? Because if you've been short calls for the last 15 odd years, the chances are you haven't done too well, because we know the strong bull market in recent years is the primary reason that makes calls more likely to be breached than the puts. However, the average actual probability of touch is still consistent with the theoretical number suggested. So that's where it comes from. You know, that average, the rule of thumb of double the delta, holds true here. Now, lastly, we analysed the win rate of these positions after the strike was touched, right? So what's the win rate? Even if it touches before expiry, if it touches the level, what then going forward is your chance of still having a winning position? Well, on the put side, the variation in win rates is slightly higher than on the call side. And the call side win rates across all underlyings are very similar. Win rates on the put side are significantly higher by 21% compared to the call side due to the strong market, right? So simply, if the market drops, as we've seen every time, by the dip, it's happened every time, and the quick rebounds from those market bottoms have meant that on the call side, you're not quite as successful as when you are selling puts. So you can see here, it's the selling puts on the SPY are 60% win rate. Wow.
And that's why most tasty traders like selling puts.
That's exactly right. They go through all this research, all this back testing, and they find out that their pot and their pop, we'll get into the lingo, won't we? Probability of profit is your pop. The probability of touch is your pot. And then, of course, your chance of it, of the stock going into the money and being in the money expiry is your delta.
Yeah.
So what is our takeaways from your favorite market measure yet, Ange?
This is the best so far, Sahil. So puts have a lower actual probability of touch than calls. Got that? The actual pot on the put side is roughly half of the theoretical pot or probability of touch, whereas the actual pot on the call side aligns with the theoretical number. The win rate after positions are tested is also higher on the put side than on the call side. And this is what we call positive skew, people. This is what we like here. We've done the maths so that everyone, no matter what your background, where you come from, you know, where you started, when you started, has positive skew.
Now, as Ange said, the positive call skew is exactly what we're seeing in Nvidia. So this takes us perfectly into our big section on the Nvidia preview in What's Next.
Hey, welcome back, people. We're going to look at Nvidia and also the positive skew, what we can find out there. But before we do that, lots of people on the chat, including Ben, asking who won with the Rich versus Mini Cooper. He says he'll have to guess Rich by Glasgow Kiss.
He wasn't happy. It almost came down to it. I did actually bring some scissors in. Just that little bit that was dangling down here.
And I have to say, Mini Cooper won. This is a clean pair of scissors, people.
He
dodged.
was ducking and diving. Yeah. He gave me a look as if, touch my hair and you're dead.
He gave him the dagger look. I was there going, put your bets here, people. But it broke up before we had time to do that.
Monkey Man looking at MicroStrategy. Oh.
Wow.
Oh, do you know what I actually found out last night that on the Tasty platform, you can trade options on IBIT. IBIT being, of course, the Bitcoin ETF. I did not realize that. Sosnov put a trade on yesterday, a reverse Jade Lizard on the IBIT. So remember, a Jade Lizard is selling a put and then selling a call spread. So a reverse Jade Lizard is selling a call and selling a put spread. And that's what Tom was doing last night, which makes sense because I think that Bitcoin probably has a lot of resistance around the 100,000 level, right? Because people have been waiting for 100,000 Bitcoin for how long? 4 years, 5 years?
I mean, there's a hat on the trading desk that's got cobwebs around it.
Of 100,000 Bitcoin.
Yeah.
Yeah. That makes sense to me, and I would never go naked short Bitcoin, but I have the ETF IBIT. I own that. So selling, and I think you got about 4% for it as well. So anyway, but there was a very large BPR, understandably, because Bitcoin's vol.
Also, Ben and Monkey Man, Isar also had a very interesting strategy with MicroStrategy.
A micro.
A micro. He said if you want to trade those two, he says that's his most beautiful pair, Bitcoin and MicroStrategy.
Oof! Wow, that's lively. I quite enjoy sleeping at night. So
that's what I thought too.
Yeah.
I was like, wow, Isar, that's even more volatile than my appetite can take. But that was it.
Just reminder that crypto, of course, for professional clients only on the platform, but those ETFs are available to trade. I've got mine in my stocks and shares account. No leverage on crypto. No, thank you. So,
whilst we're on that as well, before we get fully into Nvidia, we also have Palo Alto Networks, we've got Target, and then on Thursday, just checking out the macro front, because today we had that producer price index, of course, that consumer price index as well, which came in 2.3% year on year, slightly more than expected. The expected number is 2.2. Tomorrow, we've got public sector net borrowing from UK, but also US initial jobless claims. Crest Nicholson and JD Sports Fashion, some of those out with trading statements. Oh, Crest was this morning. Did it come out this morning?
Come on, we're talking about a $3.6 trillion company, and you go to Crest Nicholson. Come on. Let's stick to what's important, what the people want to hear about, and that is Nvidia. Now, we put out on our TikTok yesterday a 2-minute preview. Okay, so if you want to look on TikTok to get the full thing, live with IG UK, right? That is our TikTok, live with IG UK. You can see that video is already playing there. But I'm going to give you a very quick run through, and this is thanks to a friend over at Mott Capital, M-O-T-T Capital. He has looked at Nvidia guidance and results from the previous 6 sets of results, right? Now look at this. It's a complicated screen, but I'm going to take you through it. The most important thing is this guidance number. So Jensen gives guidance, right? Then he beats his own guidance by $2 billion every time. Remember, the guidance for this set of results is $32.5 billion. Now, if he is predictable as predictive AI, you see that he goes 16 guidance, 18 reported, 20 guidance, 22 reported, 24, etc., etc., etc. So therefore, we can only assume that this number reported tonight is going to be 34.5 billion. Therefore, that becomes the whisper, right? Because it's such a predictable pattern that people now expect 34 to 34.5, even though the analyst estimates only 33.2. If this comes in at 33.2, for me, that's a disappointment, right? Because he's always added 2 before. Now, at some point, it is going to slow down. So let's give him a little bit of room. Let's give him a bit of leeway. So I'm looking for 34 billion of revenues tonight. Okay. Now, what's the guidance? Previously, the guidance has then jumped from the reported figure, so tonight, if that's 34 billion, with an additional either 2 or 2.5. So reported revenues tonight, I expect to be 34 billion. They need to be 34 billion with a stock at 147. Then you add 2 billion to that, and you're talking about a 35.5 to 36 billion guidance for revenues for Q4. That's what we need to see tonight. We need to see 34 to 34.5 billion reported revenues. We need to see guidance of 35.5 to 36 billion for the Q4. EPS he's got to beat that as well. Expectations are at 74 cents. I would expect him to hit maybe 76. And then margins, watch out for the margins as well. They might be lower in the guidance. Some people talking as low as 73.5. Right.
So you're saying if we don't get 35.5 to 36 in terms of guidance, it'd be a disappointment.
With the stock at 147, it was slightly different at 140 yesterday, right? There was a little bit more of a room for error, but there is no room for error at all-time highs or within a very short amount away from all-time highs. You got to hit 34 billion against 33.2 estimated. And he's really got to come out with a guidance minimum 35.5. Now, we've had, is there concerns around SMCI demand? Is there concerns around Blackwell overheating? So is he going to put a little bit of caution into that guidance? If that guidance is sub 35.5, the expected move, remember, Nvidia, Ange, is...
Expected move is around $7 or just under $7 on volatility of
percent. So you're right, 7%.
Yeah.
But about $11.50.
Yes. What was the volatility again? 116 was it?
Yeah, get it up for you here. It's the vol's 116 and the expected move is 8%. So let's go into that trade function. Here we go. 122 vol now after yesterday because of course there's more downside.
Yeah.
But $11.60. That takes you down to $136. So if he comes out with 34 billion in revenues but only 35 billion in guidance, I would imagine there is a risk of this stock dropping straight down to 136, 135, 136. 135 to $136. If he comes out and smashes it, if that guidance is 36 billion and his revenues are 34.2 billion, then new highs we see, I would imagine. Just watch that margin number though. The margin at the moment I think is 75 for this quarter, 75% margin. If that comes in at 73, that's going to be of concern. That would be the one negative that holds us back.
Just be aware as well that, you know, whatever the move is, right, Rich, is going to whack the rest of the market. So please have your guardrails in place. If you've got open positions, you know, with the NASDAQ and anything that could possibly move on top of this as well, make sure that you've got your guardrails in place.
That's a good point. Let's look at the expected move for the NASDAQ. I think that's 1.7%, right? So on the, let's see, yeah, a $5 move on the QQQs is only 1%, is it? Yeah, the QQQs trade at 500 and the expected move is only 5.
Wow, I'd expect that to be.
Have we found a trade opportunity, Anne? That doesn't make sense.
Have a look. I mean, have a look at just out of curiosity, have a look at S&P.
Yeah, the spider. Let's see. What's your prediction on the expected move there?
Wow, I'm gonna go with, you know, double that of what you just saw, and which is a very weird.
Wait, I mean, it can't be more than a percent either. God, if I'm going to trade this, if that's no, that can't be right.
Nvidia now
$4 expected move.
For more.
It's 0 day. I thought we were going crazy. It's tomorrow's we need to look at because it's aftermarket.
Yes. So
right. So there we go. For $5.40 move, still only 1% on the spiders. Right. So 1%.
You were 0 DTE just now.
0 DTE, exactly. And then on the QQQs, we're looking at 7. That's more like it.
Yeah.
So 1.5% expected move on the QQQs. Ooh, tricky.
Yeah, it is tricky.
If Nvidia is going to move by 10, is the S&P going to move by more than 1?
Well, Nvidia accounts for more than 7% of the market cap of the S&P, right?
No, of NASDAQ.
NASDAQ, yes,
Yeah,
that's right.
Yeah, it's only 2% of the S&P.
So then, you know, I would, an educated guess would be, yeah, I mean, we're going to see a much bigger move, right?
Tricky one, isn't it? Yeah, you're whispering.
I am, because I'm starting to feel quite queasy here because, you know, I have, you know, taken off and put it into like boring bonds. Boo. But I am feeling
You still got some
queasy either way.
exposure in Nvidia, though, don't you?
Some exposure, yes. I have half my exposure.
Right.
So yeah, I would say that I'd be looking to re-enter, depending on which way it swings.
Well, would you not sell some puts then?
Yeah, I saw some puts on Thursday. Remember when Tom Sosnoff was asked by a very, very smart gentleman in the crowd, and he was like, there are only two ways to cut your exposure to Nvidia. Either, you know, lessen your position, or you got to sell puts, right?
And well, yeah, that was that. The guy said no to sell calls.
Sell
So he
calls.
was saying, should I do a covered call or should I buy puts to protect my position? And Sosnov just said, why don't you just sell the stock?
Yeah.
So, you know, that was if you've had Nvidia all the way up and because remember, the strategy I always go for. If I put 10,000 into Nvidia at $100. Then that 10,000 is now worth 14,000. So why would I not just take the 4,000 off and get back to my original investment? Because I wanted to invest 10,000 into Nvidia. It's now gone up 40%, so I've got 14,000. Even if you sell 30% of your position, you've still got the same amount that you put in. So that's the way that I normally think, but that's why my girlfriend still owns Rolls Royce at 550, having bought it at 125, and I don't.
Just punching up this, which is very useful for all our viewers, because they were asking throughout the week how to get onto Monty's list. Nvidia, there you go. Monty certificated in has ahead of the game crunched all this in terms of changing sentiment, client sentiment ahead of those monster results from Nvidia.
Right now, I went straight to the kitchen and to get myself a cup of coffee after I came out of here. And I bumped into one of the real smart guys in the IG business. And he said to me, what's the show on the train in this morning? And these ETCs that Goldman Sachs were talking about, right? That was their big call for next year. The X-Tech compounders. We had a discussion. He said, I didn't quite understand that. What do you mean by X-Tech? And I thought about it, and it is actually quite a bad term because it sounds like they used to be in tech, but now they've moved into something else. That's not what it means. It means non-tech compounders. So as Luke pointed out, that means your Novo Nordisk, your Eli Lilly's, your Louis Vuittons. It was, you know, it was a bit of pharma and a bit of
GLP-1 people.
What? Sorry.
GLP-1.
GLP-1.
Novo Nordisk's biggest revenue
got you.
spinner, the obesity, diabetes, right?
Yeah. So just stocks that have got quality earnings growth, and that the earnings growth has got good free cash flow, and therefore it compounds over time. That is not involved in tech. That's what Goldman Sachs were pushing for the year.
So Novo in the Ong pension is my king or queen. Has to be right for the longer term, just because I think that, you know, this isn't going to go away, and the vast majority of people, rather than heading to the gym, are just going to, well, just poke myself with a needle, which sounds completely illogical.
No, it's a pill, isn't it?
It's soon to be pill. They're still testing it. They're not selling it over the counter yet. You can be part of the early trials, or if you're really like to the stage where they have to send you to London Zoo, mate, to get yourself a CT scan, because the normal, this has happened in the United Kingdom.
Oh,
because my friend had to draw straws because they wanted to know which consultant was going to have to tell the patient that they were going to have to go to the zoo CT scan because the human one wasn't big enough. So you have to draw straws. And my friend was like, please don't let it be me. Okay?
I am lost. So people are getting scanned in London Zoo.
Because they're too big.
That's actually happening.
It has happened. They're now
How to really build somebody's confidence when they're already, wow, that's incredible. Right,
So, on that note,
let's see. So Adam DeLue's saying Nvidia beating 7 out of the 8 last earnings. I have a hunch that as long as EPS and revenue is a beat, but guidance is lower, then it will still pop to the upside. No, I disagree, because the analysts are going for 33.2. They're definitely going to beat 33.2. There is absolutely no doubt in the world that Nvidia will beat expectations tonight on revenues, but the market is already priced in a number at 34 or above, because he's always done it previously. Therefore, the analyst number doesn't mean anything. But yes, I do agree that the guidance is going to be key, Adam, and you could well be right there.
it's always what is ahead, not what they deliver now.
Yeah, it depends what the guidance is lower than what. So if the guidance is lower than 35.5, I will be in that market selling. And it's going to be volatile. It's going to be, so be very careful, everybody. Be careful with that leverage, especially, and don't always go boom on the first number. Make sure you read the whole thing, and you'll have plenty of opportunity to trade it if you are. Remember, it's not a game, right, Ange?
No, it's you have to get in, get out, have really strict guardrails. Take the emotion out, people, and tell us how you did tomorrow.
Very much looking forward. Good luck, everybody. Thanks for all your contributions to the chat today, and we'll see you after we know those Nvidia numbers. Are they going to be in the 130s, or is it going to be in the 150s? Can't wait to find out. Have a great day.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means? Time for the last call. Even the S&Ps, no. Almost a 90-point range, a little bit more in the even the S&Ps, but they're up 14, Sadnov, after crashing and burning this morning on the fears of nuclear war. Nuclear war ends up to being good, Sadnov. Nasdaq up 180.
Hold it. When were we at nuclear war?
Well, Russia was stockpiling or making bunkers and looking to escalate their nuclear arsenal. That was the alleged news. Nasdaq up 117, Russell up 12, and the Dow down 160. Dow been weak all day long. Volatility up by 33 cents. It was up by about 90 cents this morning, with the even the S&Ps down only around 20 or so. Volatility staying bid all day today. Bonds up 14, 116.24. Sadly, for somebody who's been long bonds for so long, is this an uptick?
Is this an uptick? Yeah, it's an uptick. It's not down.
Totally agree with you. Bitcoin continues its rise, meteoric rise, trade up to 94.7, out off it's 93.6, just about 1,000 off of its highs, up $1,600. Oil up 14 cents. Volatility 45 IV rank in there. Gold up $20, about $10 off its highs. Still having a good day. You can see here almost a 0.75% move in gold. A little less in silver, but silver's been leading as of late. Sadenoff, that's all I have on the future side. To the downside, UNH, that's what's hurting the Dow. Lulu down 7. Goldman Sachs down 6. Home Depot down 3. DJT down 2 and change. Coin weak all day also, even though Bitcoin is higher. Coin down $2.70. On the upside, MSTR, I guess when Bitcoin goes up, MicroStrategies goes up, unlike coin.
It's kind of weird today. MicroStrategy's out of control to the upside. That's my worst performer today.
Yeah.
I have a small position on there. It's a tough one.
Yeah, that's a big move. Anything that's going to,
Yeah.
It opened around, I don't know, under 400, under 390 actually, and it's 446. That's a big move. Netflix up $25. I cannot believe it after the Tyson fight that most of my friends, myself included, couldn't get to see because of all the buffering. Up another $25. Costco up 9 and change. Nvidia up 6. Tesla up 6. Asazov, there's not a stock up here that I did trade. MSFT, Microsoft, up $1.36 out of a little diagonal trade in there. I already took my profits from my option trades today. Sadenough every Tuesday and Thursday. Lucky for you, today was Tuesday. I'm sure you got on that trade. My legions of fans did.
I'm sure they did. Yeah, it's kind
What says you today? You weren't as active as you normally are.
Not really. You know, I mean, I was kind of busy. I was in meetings most of the day, but I did trade a lot. My biggest loser was MSTR. Really my only loser kind of type thing. There's a couple little stocks, but MSTR was my biggest loser. And the biggest winner for us today was probably bonds.
Frankly, this stock with $2 wide markets, I don't know,
MSTR?
You got yourself into this. This is you.
I have a tiny position on.
But $60, 15% will do that to you.
Thank you so much.
It makes the tiny small. Makes the tiny small big. Sorry.
I have like some strangles on there small. I lost $20 on them today. I didn't lose like $2. I lost $20.
Yeah.
And I've adjusted.
That'll do it. I mean, it doesn't take a lot, but that's a lot to do it.
Yeah, I got it. Yeah, I'm very aware. Yeah, we only made about 50 trades today. We've been averaging closer to 100 trades a day. Pretty much just me, just in doing other things. But like I said, no real horrible problem. I'm a little bit short some of the big indexes, and I'm just, you
looked golden this morning. I'm not going to lie.
I looked really good.
You had everything. Volatility is percolating. Bonds reversed.
I mean, to be fair, I had them today. I came in short. Pre-market, they were down 50 or 60. When they're down like...
Oh, no, here we go.
When they're
down... Do you know how many times you have said just this month? Well, it hasn't been that many times that we've been down this month. So the last 2 months. When we're down X, you know how hard it is to turn around? And we've turned around each time.
When they're down 50 or 60 points... they're really hard to turn them around, and yet they did it today, no problem at all. Took them a couple hours, but they never really touched the lows. Sometimes when they're down like 15 or 20, I'm thinking to myself, oh, this, they could easily turn these around, but they're down 50 or 60. I'm thinking you're going to get a little downside momentum, and me was wrong.
Yes, you were.
By the way, don't forget. Besides, the only earnings play we have for tonight is Target, just so you know.
Target, TJX, WSM.
TGT.
TJX, TGT. If I said it, if I mushed them together, I'm sorry.
Oh.
Target, TGT, TJX, and WSM.
So can I tell you something weird about Target today? So I have a strangle on in there.
Wasn't it up early?
It's down $1, but whatever. I have a strangle on in there. The 44.70. Here's the crazy thing. It came in $1 today.
The 144, 170 in D's. Yeah, we looked at this. Let's look at the net.
Came in $1.
I believe you. I believe you. You're right.
Of course I'm right.
90 cents, but you're right. Whatever. I don't want to pick dimes with you, but it's 90 cents.
Okay. Well, this is a stock that has a tendency to really move.
So you're going to take your buck that they're giving you this gift, close all of it, which would probably be the prudent thing to do, or close half because you're a ganef.
Well, the problem is you don't want to close it unless you're going to do something else.
And in Target, if you were going to pick a directional bias, look, Target's gone nowhere south. But you know puts or schmutz for earnings.
I'm Target.
Keep your short 44 puts and buy 147 put. Do it 1 to 2.
What's the expected move target?
$14 in all of December for
What's it overnight though?
overnight. Are there no weekly options in Target?
That's what I'm looking right now.
I don't
Yeah, they're weeklies. Yeah, we got ones that expire November 22nd.
Okay, well, I'm sorry. I don't
TGT.
have that on my screen here. I apologize. You must have touched something.
It's weird. The expected move this week, because the vol so high, is over $12.
$12, yes.
The monthly move is 14. I think you play the weeklies.
Oh, you're not going to do another bat diagonal spread, are you?
What do you mean? I didn't do a bat diagonal spread.
Like you did yesterday for earnings.
That was a ratio spread.
A ratio diagonal spread.
That wasn't diagonal. It was same month, wasn't it? Yeah, it was same month.
That wasn't the same month.
Oh, wasn't?
You sold 2 in the front month, and you bought 1 in the back month, December, with 31 days. You bought the option that was 2-3 strikes in the money, and you sold the option that was 4-5 strikes out of the money. You sold 2 of those.
I like that.
That would be a diagonal, ratio diagonal, if you want to.
Okay, so the expected move is
$12.
$12. It goes $6 out of the money, takes you to the $7 out of the money, takes you to the $148 out of the money, takes you to the 146, $10 out of the money, takes you to the 145s. Buy those.
Here, look, I'll do it even. Nove 22 with 3 days to go, Sadnov. Here's what you do. You sell the 70s twice. A little too close for you, I noticed, but that's what you do. You sell the 70s twice.
Oh, what do you want me to do?
You sell the Nove 70 calls 2 times with 3 days to go, and you buy the 55s, $6 worth of risk. A little less, sorry, $8 worth of risk.
You buy the 143s, which are $12 out of the money in December, which is the expected move.
Look, I put up on the screen for you. In December, you buy the 55s, they're at the money 1 time. You sell 2 of the 70s with 3 days to go. You do it for 448. That's your total risk to the downside, 444, 448, whatever you pay for it. It gives you those same 12 deltas I gave you last time. I didn't do anything for you crazy. It's a 55-170. Come on, a man of your means with all the toast you got. I mean, honestly, let me teach you how to make some money here, please.
I don't love Target, so I'm just going to stay small. I got a little. I'm going to do
Nobody loves Target. Look, it's gone sideways forever.
I know. I'm going to buy the 143 puts, sell the 139 puts. Buy the 143 puts in DC.
Oh my God, not this.
Sell the 139 puts in November.
Not this stupid trade you're going to do for 72 cents or some stupid thing like that, where you possibly can make 30 cents, possibly lose $4. Not, you're not going back to your own trading style again, are you? You're not doing that, are you? Oh, for crying out loud.
I can't get filled. Doesn't matter. I hate Target.
Yeah. Yeah.
I took my profits on my strength.
You're doing it for a debit, right?
Debit.
Yeah.
Like 80 cents. Can't get filled.
Yeah. Good luck to you.
I tried. I huffed and I puffed and I blew the house down, but I couldn't get filled. And at 80 cents, I still can't get filled. Oh, filled. 79.
You got low D over there.
Oh, shoot. Yeah.
God, you got one job to do. I mean, well, you have two. Look pretty, which we know you can never do, and turn on your volume. Were you listening to TikToks before?
No. Got one job to do. Look pretty. I've used that line before, by the way. It usually gets you hit.
Doesn't go over well.
No. Usually gets you in trouble. Put me in the doghouse a couple times. I got you one job to do. Just look pretty. Nope, didn't work. All right. Yeah.
I got my peeps writing in. I couldn't get the stream either on Netflix. Go figure the stock price. I know. I agree with you.
Netflix, it's up today, you said? I haven't traded it.
Yeah, it's up today. It's one of the leaders in the clubhouse. I don't know if it's up $25. Making new highs.
It's just.
If you would have told me after the performance this weekend with Tyson that the stock was going to make new highs and not make new highs by, $1 or $2, but $50, I would say you're cray-cray.
Reddit had its IPO this year, and it's $137 and almost $138. I couldn't wait.
Just sell it at 80. Actually,
80? I couldn't wait to sell it at 60. I held that stock for 6 months.
I know.
Couldn't wait to hold. Couldn't wait to sell it.
I know. You would have sold it at 45. They would have let you.
I'd have sold it at 32 if they would have let me. It's 138. Unbelievable. Unbelievable. I mean, some of these stocks are just, it's crazy. I mean, United Airlines, which I've always thought it was cheap relative. It's $94.
I know.
I mean, $94. That stock was $30, $35.
My entire life. I have a UAL position on. I have a strangle on there. I'm basically unchanged.
How's American Airlines still $14?
American Airlines?
Yeah, it's $14.
You are correct. $14.
Love is 32.
How is it still $14? Well, it was $9 just about 6 months.
How's Love still $32? Like, what is United?
I don't know. My sister's been pushing over there. Nobody pays attention.
What is United doing? Something, right? Not serving cashews. That's all I'm going to tell you. All right, what else we got here?
We've got some house cleaning we can do.
House cleaning. So tomorrow we're doing What's Your Assumption? tastylive.com/assumption. That's tastylive.com/assumption. Send us your assumptions. Also today we came out with cherry picks, and today's cherry picks, guys, if you could throw them up on the screen, it'd be great.
Today's cherry picks was all about volatility, Sadnoff, and sorting it by volatility, high to low with sectors. It was a beautiful, beautiful thing.
Yep. If you could throw it up on the screen, it'd be great.
They could throw it up on a screen. They'd be throwing it up on a screen. You think they didn't hear you the first 2 times you asked them? See, this is the type of thing, like when Nick and I were doing this, we could read the room. Read the room, genius. Read the room. What do you think they're all doing over there? Packing their food, packing for lunch for home or something?
Packing for lunch, yeah.
Earnings this week. Before you got Target and TJX today. Nvidia is the big one for tomorrow. That's after the market.
Yeah, but
Palo Alto Networks also solid.
Yeah, don't even waste your money with that. But here, don't waste your time or money with.
And you got your beloved Baidu on Thursday.
Yeah, don't waste your time or money with Palo Alto Networks. But here's the problem with Nvidia. So
it's trading with a lot of call skew.
At 139, it looked pretty good this morning. I mean, it just looked because it just sold off like 10 points. Up 7 today. With the expected move, what did we say, 12 points?
Oh, look, they got your cherry picks up there. You want to talk about it now?
No, now I'm done because you missed their opportunities.
You're such a child. You're such. I said Wednesday. It's just basically synthetic Wednesday.
I told you before they could put it up. So
I'm just going to do it anyways.
Anyway.
Take this down. This is stupid.
Yeah, what's wrong with you guys?
Nick and Mike worked feverishly day and night and day for this, showing you the call skew in Nvidia, showing you the volatility and the different sectors, how they've rotated from January to November, how the sectors' volatility has rotated. There's good stuff in there.
Just so you know, though, what I will say is, just because it's got call skew, don't let it fool you. Like, doesn't mean it's going higher. It probably is going higher, but
right. And just because it hasn't had a downtick since say it was $40. And don't make this be like something against you. It's going to be
IBIT traded 70 million shares today. It's a big day for that. But what's more impressive is with wide option markets, The at-the-money calls traded 8,000, 6,000, 10,000, 1,000, 2,000, 7, crazy numbers. Of the 60 calls, 19,000 traded. The market's 175, 180. I mean,
Yeah, it's popular.
I don't
Popular kid in school.
I don't want to say anything, but if you ever wanted to see what skew looks like has to be 5 times as many calls trading as puts. And if you take the current price, which is, it opened unchanged, but it's up 70 cents now, 52.82. If you just say the index, let's just say 53, you go up
Sure,
to
you go $5 up even if you want to do that.
Yeah.
You got a $2 and change option, and you go $5 down. You got $1.50. I mean,
yeah, there's huge skew.
that's correct. That's why if you did an equal distance strangle in here, it would have short delta. You'll notice here it has almost.
Bullish engulfing bar, key reversal. We just bounced off the 1-month moving average. And yet,
where is the bullish engulfing bar here?
well, we dipped below yesterday's low and we closed above yesterday's high. We've covered
That
eclipse.
that's not how bullish engulfings work by definition. But
what I'm
to
getting
your
to.
point,
That's what I'm
but to your
working
point,
into.
the spirit,
the spirit is there, but it's
the
there
spirit
for
is this.
BS reason, right?
Yes.
That we have this overreaction this morning to this news, and it's occurring in the context of the same thing that happened yesterday to a certain extent. Yesterday, where was the roadmap leaving us? We're back above the 1 month, but we're still below the 1 week. Today we close, we're still above the 1 month, but we're still below the 1 week. We're kind of trapped in this holding pattern to figure out what the next directional move is, and we're not really grinding anywhere but sideways as we gear up for those Nvidia earnings tomorrow. So technically you could interpret it if you look at the wick. I know you're more of a candlestick body guy, but either way, the market hasn't made a significant advance one way or the other because Nvidia is such a black hole, such a gravity well right now for attention. I wouldn't put much stock into today's price action.
No, I completely agree. I completely agree. I don't think anything has changed. I think where we started the week is where we find ourselves now. We've had some shenanigans overnight. There was obviously a very kind of digestive inside day yesterday as the markets woke up after last week's, bloodletting is really the word that jumps out. Last week was the worst sell-off for the S&P and NASDAQ in 10 weeks. So, yeah, bad. People were, I was characterizing it as a brutal sell-off, and the YouTube comments were trying to take me to task because they thought brutal was too strong a word. Well, worst sell-off in 10 weeks, I think, qualifies. So we started the week kind of, okay, what's next? There's nothing really on the calendar. It's kind of quiet. We have big event risk midweek. Unclear what that is going to bring. So a sort of circumspect start. And then overnight, these headlines take the markets for a little bit of a seesaw. Have they changed anything? No. Do we still have all the event risk that was the kind of main event on the menu this week? Yes. All of it is sort of starting with, you might argue, UK CPI overnight, then Nvidia, then Japanese CPI, then the flash PMI numbers to finish out the week. It's a quiet week. Outside of Nvidia, there isn't really anything on the calendar that has the weight of a U.S. inflation number or a Fed announcement or, Lord knows, an election. So we really don't have that kind of a weighty thing here. And one might argue that we didn't have that kind of a weighty thing as of the middle of last week. Focus went back to Powell. Focus went back to U.S. economic data, which reinforced what Powell's hawkish rethink sounded like with the hot retail sales number. And so you are back essentially to where you were. And we know from what happened Thursday and Friday last week that the path of least resistance in that default is lower. So you might want to be careful here. Because nothing has suggested over the past 48 hours of this week that default has changed. And there's not really much on the calendar this week that should change it. I mean, perhaps we get a Treasury Secretary announcement. It won't be Howard Lutnick. He's been tapped for commerce at this point.
Which puts him in a more powerful position for tariffs.
That's right, and makes him oversight of Robert Lighthizer and what's going on at the USTR, which suggests we're sort of in the reasonable trade war realm where we're going to do trade wars, and you could have sort of your view on whether they are a good idea in general or not. But it doesn't look like we're going to have anything worse than the 2016 administration's version of this. We're probably not going to do out there things like a blanket 10% tariff on all imports. Like that kind of a thing with these kinds of folks in charge probably doesn't happen. So maybe you get a Treasury Secretary announcement and that moves markets. But other than that, there's not really anything on the immediate calendar other than, of course, Nvidia and bullish hopium that it's going to change sentiment. And maybe it will. I'm not saying that it won't, but certainly I think after last week's performance, the bulls hope that it might. Other than that, there's really nothing on this calendar that's that explosive. And in the absence of things that are explosive, the path of least resistance, because everything else is unchanged, looks lower.
Dylan, as we peer into this Nvidia report as perhaps not just the most important earnings report of the week, but also the singular most important macro event of the week, we perhaps got some good news, at least for the semiconductor industry. Yesterday, we were talking about SMCI, probably a bad sign that no one wanted to be their auditor. Couldn't have had worse timing. Talking about bottom ticking a story here on Overtime. Wow. About 15 minutes after Overtime ended, SMCI announced that they have hired BDO as an independent auditor. They are looking to complete their annual report on Form 10K as soon as possible so that they can get a plan in front of the NASDAQ to get everything up to date. Maybe there's fraud. That's what the market seemed to believe. Maybe there's not. BDO signing on seems to be a big deal. Dylan, this is NVIDIA's one of their largest customers, number 3. But NVIDIA today is taking everything in stride. SMCI is up 31.2%, NVIDIA up 4.89%. Is this just an appetizer of what's to come tomorrow? Is this the Superglide's back, right?
Yeah, I mean, obviously the answer is yes. It's just a matter of to what degree. Just to pick up on my NVIDIA comment yesterday, I think NVIDIA is set up less so, but now actually, but I still think NVIDIA is set up with an upside bias because it's had a couple of clouds hanging over it. The biggest one being the SMCI. Is SMCI a fraud? Was the biggest cloud. The degree to which that cloud lifted over the last 24 hours, which obviously the equity changes in both NVIDIA and SMCI stock reflect that change, is part and parcel to the whole sort of momentum with NVIDIA. And then to the extent to which that whole Blackwell speculation about overheating or whatever it was fades away, and the extent to which this is an opportunity, since it's coming up on December, this is an opportunity for NVIDIA to give an outlook for 2025. And that outlook for 2025 I think has more bias to be ahead of expectations. It's only a matter of where the stock is relative to that. And also I would say the fact that NVIDIA has basically done nothing relatively for a couple months sets it up for more upside.
SMCI going through its turn of the barrel, as I recently learned, it's not the first time that the company's had problems. In 2019, they had to delist and relist because they failed to meet deadlines to file their 10K and other quarterly reports. Sounds familiar. Probably should be a change of management at the company because they clearly have a place in the supply chain as it pertains to this Superglide story. Semiconductors, broadly speaking, up 1.09% today. Just can't get rid of that uptrend yet off the lows in August, Ilya. We are hugging the 50% mark. I guess this is a good place to put back on the condor. It's worked before. It's going to work again. Why not? This is a market that doesn't really seem to want to make directional change one way or the other.
At 35 IV, you think that juice is worth the squeeze?
Technically, yes. The answer is not. It's not a no. Let's just take out our protractor here and go to the charts. Let's go out. Where's the high low recently? 285, 200. We could make that work. We have to pinch a little bit more here. And you know, going down to just the expected move, 63% probability of profit, you're looking at risking 3 to make 1. It's not a terrible trade. It's not the best setup that we've seen in terms of risk to reward here, probability of profit, or in terms of the risk to reward ratio in recent months. But it's directionally neutral, which again, from my perspective, right, where do I currently have, at least in the follow account, where's most of the holdings? It's like ESH5 long, NQH5 long. So adding another trade there, consistent with the methodology of when you reach a certain beta weighted delta of your portfolio, you want to add strategies and time horizons that, you know, reduce your overall correlation. And so that's why I'm kind of drawn to this, because worst thing that happens here, we move lower but stay within the bounds of the strikes, then the NASDAQ positions I'm holding are probably going to get hit in the face a little bit more if semis aren't participating. But this trade could actually work out. If the NASDAQ, on the other hand, breaks out, this may become a loser as we test the top side, but the NASDAQ and S&P positions are big enough that it should subsume the losses here. It's also part of like what am I already holding? What eggs are in my basket? What can I do to diversify them somewhat as we look into this earnings report? Because I definitely have enough upside tech exposure, both in the follow account here and in my PA.
Yeah, I mean, I look at this and it doesn't really inspire me to say this is how I want to allocate the incremental dollar. Not to say that it doesn't make sense. If you want to say essentially, you know what, these markets are way too jumpy, I want to be long the idea that there is a super glide, and I want to have that idea on as some kind of a background value extracting, even modestly value extracting proposition, because everything else is jumpy and the geopolitics is weird, and we're going to have a transition, and the lame duck Biden administration is clearly not beyond making some big decisions in the 11th hour. So I just don't want to even engage with all of that. I just want to believe that there's a great and wonderful tech-powered future at some point through all of this. That makes sense. This is sort of a piece of that story, saying I want to sit with some exposure to generally better outcomes in the semiconductor space, that is vol contraction, over some period of time. That's not my directional preference. Takes me away from things like this, and the low IV numbers kind of help me to not have FOMO about foregoing something like this. I am more interested in the fact that this is basically very NASDAQ adjacent in its structure, in that it had a range. It seems to have cracked through its most recent low. It's retesting that most recent low, where it was directly atop that 50 that it dipped under, and now it's kind of retesting the gap right there. I don't think this is a confirmed sell, but if you get under the most recent swing bottom yesterday, there is a compelling tactical opportunity there to test the bottom of the range. And that would be more interesting. But it's not anything that I think you have confirmation to do yet.
Dylan, it's a little early to be thinking about what happens beyond Nvidia tomorrow, but what would be the worst case scenario for you? What would you hear from Jensen Huang that would tell you that this story's over?
Any indication of a slowdown in the rate of change of growth, right? I mean, Nvidia's entire valuation is predicated not on anything real, but on perceived future demand and the rate of increase of perceived future demand. And so to the degree to which he says anything that diminishes or cautions the rate of growth in perceived future demand, it'll wreck the multiple on the stock math, just a simple sort of stock market math. I don't think Jensen Huang's going to do that.
So if we can get through tomorrow and we see that the company has good earnings, good guidance, they are able to explain SMCI, they brush past the concerns about these new Blackwell chips overheating, and they continue to suggest that investment in the area remains strong and demand is through the roof. Just check the boxes and next leg up begins.
I think so. I mean, I do think that you're still up against sort of a crazy ball treasury pick to your discussion yesterday. So I think you want a combination of sort of off to the races on what you want is a sort of quadruple threat of super glide lives, 1, labor market healthy, 2, which you won't get till the first week of December, that first Friday in December now is a couple weeks away. Treasury Secretary is not, Charlie Gasparino, although I think that would be fun, but ideally the Treasury Secretary is actually a person, and inflation's under control. I mean, those are your 4 boogeymen. So I would say they're
former journalist. Do you have inside information that Charlie Gasparino is not human?
No, but I'm hoping Charlie Gasparino will be the Treasury Secretary because then it would be fun.
Okay, so maybe he's like a lizard person.
No, he's a good guy.
He's a good reporter. I've talked with him a few times over the years.
Yeah. But no, you need a stable Treasury Secretary, inflation under control, labor stable, and the super glide. Those are the 4 legs of your table, and you can get all 4 of those by whatever. I don't know what the first Friday in December is, December 3rd or something.
I think that's what the Lutnick pick today at Commerce Secretary realized. And that was actually, I retweeted it earlier today. It was part of the New York Times reporting. It's getting people's attention. Of all the picks that Trump has made, there's one pick that seems to be not rushed, that seems to be a little bit more deliberate than everything else. And that's coming across as the Treasury Secretary, specifically, whether or not you think the New York Times is fake news or otherwise, I happen to trust their reporting on this. Mr. Trump, or should I say, quote, Mr. Trump is especially concerned about the effect of his Treasury pick on the stock market and does not want to interrupt the market's momentum since his victory, unquote. And that's where it comes down to the discussion of who was it going to be. Is it the pro-tariff guy in Lutnick who could really just kind of shake things up because he's not really a markets guy in that respect, But if he wants to do his tariff stuff, he goes over to Commerce Department and now he can have a bigger say in that. But in terms of market functioning and the bigger issues that Treasury is involved with, I'm particularly drawn to Bessent, if only because the George Soros Druckenmiller trading of, breaking the Bank of England has always been a point of fascination for me ever since I was a kid. Sincerely, like I got into being interested in foreign currencies. Between 1999 and 2000, I spent time in Europe, and I was like, hey, hold on a second. How come some of these currencies I can't use in this other country anymore? They were just here last year. And that's when I learned about the euro when I was a kid. It's like, why did this happen? And as I got into finance, someone made a lot of money when all this fell apart. And so if you're talking about a world in which we're thinking about trade relationships potentially being renegotiated because of an aggressive commerce secretary, then someone like Scott Bessent has a lot of experience in currency markets. He was on the team that helped break the Bank of England with Soros and Druckenmiller. He's a really fascinating guy. You may not agree with his political prognostications, but as a macro person, he's been a name that's been out in the world for some time. And if it's him or Warsh, Ilya, right, you have people that are in control of Treasury who are stable, who have a long track record of public statements about how markets function, about what the Treasury's role in keeping markets functioning should be. And then you have a lot of confidence there because there's a lot of experience and not someone new at the helm of the world's biggest bond market, right?
Yeah. No, absolutely. And this sort of goes to the idea that I was exploring just moments ago, saying, you know what, there's not a lot of risk on the calendar, but there's all these cabinet announcements. Maybe you get a Treasury announcement this week, and that really would be very impactful, because if you did get confirmation that it's not, you know, the creature from the Blue Lagoon, but someone with relevant experience, somebody that's a safe pair of hands, for example, like the pick of Howard Lutnick for Commerce, which is clearly a competent pair of hands, whatever you think of the policy direction. This is somebody that knows the toolkit and how the machine works. I think markets could find a lot of confidence there. And you made the point the other day that could be good for a pop in bonds, not because it would mean something about rates being lower, but because it would be a factoring out of a sovereign risk element, even episodically. I don't think that there's necessarily lots of room to run on a move like that, but it certainly could be that were you to get an announcement like that, you could get a pop in the bonds just because that risk would come out to some extent. I don't think there's a lot of it there, but it could exist, a kind of chaos premium, if you will. And to the extent that you factor that out, you get slightly higher bonds, slightly lower yields. That maybe is a help for stocks. That maybe is another lump for the U.S. dollar.
Dylan,
I mean, to your point, I think that the first leg of this is the super glide, and the SMCI news is a great preset. Now, so as long as Nvidia comes through, as I expect they will tomorrow, that piece of it will be taken care of, and then it'll come down to inflation, jobs, and leadership. And, you know, we'll see. But we're going to have a tremendous amount of information between now and December 6th is that jobs report. So there's got to be some inflation data between now and December 6th as well. And I think there's a reasonable chance you'll have a Treasury pick before December 6th.
I'm trying to think about, you know, we're looking at the comments from Speaker of the House, Mike Johnson, who says we're going to get continuing resolution through March, perhaps, or into March at least. There's just not enough time to negotiate a new, spending bill at this point in time. They're already in the midst of the new fiscal year, so kick the can, get into the new administration, then Republicans can begin to iron out their new spending plan for the fiscal year that begins next October, right? And that's when you get the extension of the TCGA and blah, 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 blah. I wonder if there's an increased prospect of government shutdowns along the way, not to, shoot the Trump administration in the foot. But if Trump wants to slow down the bureaucracy of the federal government, we've seen historically, we saw in his first term, that there were some government shutdowns where workers were furloughed for weeks at a time. And that's a way to kind of stop money going out the door, and the government goes basically bare bones. That said, I don't think we're ever going to get to the point where we default. Trump wouldn't want that on his watch. The Republican trifecta would never allow themselves to be branded the company that was holding the bag while the U.S. lost its AAA credit rating and defaulted on its debt. So I pose the question to the chat, right? And to you guys as well here. We don't have to have an answer for today, but something to think about as we look into the next administration. As a factor for effectuating some of the policy changes they want, will the debt ceiling negotiations, debt limit negotiations, the prospect of a U.S. default, how seriously will the market take it? When it feels like realistically it's going to be kabuki theater as it has been for the past decade. But it feels like in this case in particular, it's going to be especially kabuki theater because there's no incentive for a governing party with all three, with the trifecta between legislative and executive, to allow that to happen on their watch. Ilya,
And, well, also, who are you shutting it down to? Sorry, but like, it's one thing if you have the Democrats are running the House or the Senate and the Republicans are running and you can have Nancy Pelosi and scold her and say, oh, you're spending too much money, or you can, there's some, like, what's the political advantage of shutting down the government when there's unified control?
Yeah, but you could have said that
and it's yours. Yeah.
Yeah.
But you could have said that in 2018. In 2018, right, we have the midterm elections where Democrats take back the House, but they're not inaugurated until January. The government shutdown starts on December 22nd, 2018.
I still feel like at that point that was very much postured as Trump versus Pelosi. Like there was political advantage in 2018 because there was an iconic Democratic elite leader that could be pinned with the responsibility for the shutdown, even if it was a false charge, because they actually didn't have the power. Like, I don't know who, like, so it's not the only reason you do it is for some political advantage against an opponent.
To some extent, and to Dylan's point, I think it's well taken. You do it for political advantage, but we've also seen that the Republicans, and this is sort of how Mike Johnson is speaker, have within their party a schism between the traditional wing and the sort of more populist nationalist wing. And that populist nationalist wing is not beyond trying to score political points against the other side in their own party, hence the demise of one Kevin McCarthy and the ascent of one Mike Johnson. So
Kevin McCarthy definitely is the hacker, by the way. Like, Matt Gaetz's ethics committee investigation was leaked today. Apparently, someone hacked the documents.
Oh yeah.
Prove me wrong that it wasn't that it wasn't Kevin McCarthy. Like, sorry, I'm taking that side of the trade.
So I mean, obviously there is the possibility that somebody in the more populist wing of the Republican Party goes, you know what, we're going to be ideologues on this. The hell with your house. We're going to burn it down. That's possible. They've done it before. Maybe now that they're in power and they also have the White House, we can. I mean, I think we see Mike Johnson has been able to corral that bunch to some extent. So maybe that's not what occurs. I'm with Dylan. I don't think it's likely that you really do that, but I don't think we can dismiss it outright as if to say, oh, well, Republicans are on the same page necessarily. Maybe not. There are deep divisions in the party.
But I would short it. I would short it going to anything beyond theater the same way I would short oil on a Middle Eastern escalation.
I tend to agree.
Yeah.
I tend to agree.
Yeah, it seems
I don't think that episodic volatility where something spikes because people start yelling out of turn can be discounted, but ultimately I agree.
So on days like today where the market starts selling off, I was talking to Westwater this morning where it was like, Thomas, this is the easiest trade of all day. Like, you always fade nuclear war fears. And the market rebounds the rest of the day, kind of just floats higher, and nothing's going on before Nvidia. The technicals really aren't changing for the S&P or the NASDAQ. We're still right around the 1 week moving averages, not making progress directionally. I start thinking about, putting together game plan, scenario analysis for what may happen in the future. And I think that's going to be an interesting exercise that, we have 2 more days of overtime this week. Next week is up in the air, I think, because there's holiday. We may be together on, I suppose, Monday, Tuesday, perhaps, but definitely not Wednesday, Thursday. And then we're going into a holiday schedule. One of my asks of people in the chat, and something I'm going to be asking tomorrow on other programs, will be, what are the biggest risks for 2025, right? And what's the playbook that we should be putting together around those risks? I'm not the kind of person who likes to face an emergency like what we saw in early August and panic and go, oh my God, I've got to sell everything and get short. Like, okay, now that the market's done this, what do we do? Where do we skate to where the puck's going to be? Do we blindly sell vol here? Do we get more short, right? Yada, yada, yada. So I think we should crowdsource guys here with the overtime group, a very smart group of people, I would say, because they're listening to the programming after all. Let's start to look at what the overtime chat thinks are the biggest risks for 2025. I have my list, and I call them gray swans because technically once you identify the risk, it's then known, so it can't really be a black swan. But I'd be curious to see what other people think their gray swans are for 2025. Dylan and Ilya, you guys start thinking about your gray swans for 2025, and let's talk about that after the Thanksgiving break. So not next week, but the week after on overtime. I think as we eat some of this turkey and digest what's been a pretty good season of trading for a few of us around here, we can ruminate on how to begin to put together a playbook to avoid being emotional during what's likely to be a very interesting first few months of the next calendar year. Ilya, you have macro money coming up next. I'm on the price of truth later today with Victor. So we're going to take a few minutes to get some water and clear our throats and and get ready for more programming here on Tasty Live. So with that, overtime is out of time. We'll be back in just a few minutes after a quick break. Of course, catch me later after Ilya. Dylan, we will see you in the future as well. So for Dylan Radigan and Ilya Spivak, I've been Chris Vecchio. See you in a few minutes for Macro Money with Ilya Spivak.
See you there, folks. It has been an interesting day for financial markets, but ultimately one without progress one way or another. We start the week with the markets shaking off some of the negativity last week. Of course, that saw the worst sell-off in 10 weeks for global stock markets. Things a little bit quieter this week to start until we get into the meat of things, giving us some space to get back to the nuts and bolts. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live, and that's exactly what we are going to do here. Get back to what macro trading, at least in my humble opinion, is going to really boil down to when you get away from big sweeping events that change markets writ large, like U.S. elections or massive responses to big pronouncements from the Fed that impact not just the U.S., not just the dollar, not just interest rates domestically, but the world over. Now we, on a week like this week, get a little bit of a window to get back to what is a trading approach that's narrower and more focused, and we find the opportunity to do something a little bit more textbook, a little bit more straightforward for a macro approach, and we get that opportunity by way of UK inflation data. And so what we're going to do here is we're going to look at what's expected, look at how it fits within the kind of big picture, bird's eye view macro narrative, look at what the price action implications might be, and then see if we can't figure out a trading setup out of this bunch. So let's begin with, first and foremost, what is on the menu. And here we have the UK CPI. It's broken down by its contributing factors, and we see that the expectations for October are that we are going to have a slight uptick from what has been a 3-year low in headline CPI. That was 1.7% in September. The expectation is that we're going to inch up here to 2.2% in October. Some of that may, of course, look like the unwinding of some of this negative influence that we've seen here. And when we consider what that negative influence seems to be made up of, we're immediately, of course, drawn to look at this sharp negative contribution, 30 percentage or 0.3 percent of the decline in the most recent numbers, those 1.7% numbers in the transport sector, and then 0.22 percentage points decline in what is essentially the fuels or oil category. And those obviously stand out as key headwinds, which, with some of the rebalancing in energy costs more generally, but certainly in crude oil prices, and then the knock-on from that to transport costs, that may even out a little bit in this coming data. And you get the sense that this is going to be something that's going to be motivated by a rebasing in energy, or perhaps in food, though, of course, that has been hardly a meaningful influence recently, because the core inflation number that excludes those things is not expected to have much of a change at all. Now, some aggregators have that forecast narrowly at 3.1, some have it at 3.2. That ultimately is not the world's biggest difference, in the sense that we have this sense that we are going to have some statistical and sort of time-based rebasing, but the underlying trend remains generally unchanged. And there we can see that core inflation has been kind of idling recently. Now, if we do get the down tick to 3.1, that would be relatively close enough to say that it is in line with expectations. And there, what you would expect to see would be a reading that's the slowest nominally since September 2021, so a 3-year low, but nevertheless a far cry from the Bank of England's target, but still sort of encouraging enough that the bias would remain toward easing. And that, of course, is something that the Bank of England has already slowly started to implement. Now, where this becomes interesting is in the event that there is a surprise. And the recent data flow out of the UK has indeed suggested that the bias aims that way. The recent flow of UK economic data has increasingly diminished relative to forecast. This is data from Citigroup by way of Yardeni research. And we can see that really going back a few months now, UK economic data outcomes have cooled relative to forecasts, so much so that most recently we've actually slipped below the zero line on this index, and we can see that data now is tending not only to be cooler than anticipated, but actually is tending to disappoint overtly. So whereas up here you might have said, well, the quotient for upside surprise is narrowing. At this point, it isn't upside surprises we're looking for, it's downside surprises. And of course, what that seems to underscore is that the economy is moving with less momentum than analysts' models are anticipating. That then suggests that the upward pressure on inflation is likely weaker than the markets are anticipating by extension. And that then sets up the case, perhaps, for a downside surprise on this CPI result. As a matter of fact, we can see that the recent dynamics out of the UK economy, as captured by the most recent set of PMI numbers, this is October's figures, We're going to get November's update later this week, which we'll talk about, dedicate a whole episode of macro money to exploring this week. But most recently, of course, we can see the UK economy has been slowing. And this is a story that we've seen emerge out of almost every major economy, and indeed globally, with the loud exception of the United States, where conditions are, of course, quite robust. But as we've discussed at length on the show before, that prosperity in the United States has not spilled over. It has not left U.S. borders, even though the U.S. is, of course, the world's largest economy and many of the world's leading markets, including the world's second largest economy, China, are vendors servicing U.S. demand. So one would think that if the U.S. is doing really well, that should spill over, but that isn't happening here. As a matter of fact, October at 51.8 on composite PMI amounts to the slowest pace of manufacturing and service sector growth taken together since November of 2023. So we're looking at an economy that's fizzling. And that, of course, sets up a number of interesting conclusions. Number one, it certainly suggests that the bias toward easing at the Bank of England remains, and the makeup of inflation here, just to quickly take a look back at this chart, seemingly endorses it. We can see that much of what is keeping inflation elevated at the core, not in the food area, not in what's going on in energy and energy derivative components, but what's really proving sticky: recreation, hospitality. These are areas that are ostensibly discretionary spending areas. And so if the economy were to continue to cool, as the recent flow of data surprises seems to imply, at least momentum-wise, the path of travel seems to be toward disappointment. We have a reason to think that the Bank of England might look up and say, well, why wouldn't we be easing? These are the kinds of things that are amenable to a downturn in the business cycle. And they're probably sticky because of wages that have been baked in at elevated levels into these spaces. And were there to be a meaningful adjustment there because discretionary income were to significantly leave, and the propensity to consume in these areas because of belt tightening in an economic downturn, the inflation aspect here would deflate. There is every reason seemingly to want to ease and to normalize rates and to try to backstop the economy under such conditions. And indeed, we do have an outlook that envisions easing, albeit not at the last meeting of the year in December. You can see here the likelihood of a cut remaining still for 2024 is very low, only 6 basis points being baked in. That's, needless to say, a far cry from the 25 basis points that are needed to actually make for a cut. Next year, we have 61 basis points on the menu, so a full 2 cuts or 50 basis points all the way in the outlook at this point, and about 11 basis points toward that third cut, which amounts to a 44% chance that we'll get that third cut, and the total comes to 75 basis points. But needless to say, the markets are narrowly seeing that as a lower than even probability. So it's a bit worse than a 50-50 shot that we get that third cut at 44%. Not much lower, not much worse than a 50 shot, but a bit worse. When we look at the way that this breaks down in terms of timing, we can see that by March, from 475 to 447, that's already under 4.5. So the 25 basis point cut has already occurred here from where we are currently over to March. And then we get sub 425 by August and almost there by June. So somewhere in here is that second cut. And then, of course, there's the slight possibility, the slight flirtation, as it were, that we could keep declining from there. So that's how the benchmark here sets up. And if you were to get a weaker than expected CPI number, as the recent flow of surprises suggests, the upshot would be that perhaps you get a slight upshift here, but you really would have to go a pretty long way. CPI would really have to surprise by a wide margin for it to make sense to say that we are maybe still going to see a cut in December, moving what would be essentially 19 basis points from here. Seems like the surprise would have to be truly epic. So that's probably not in play, but the pathway for next year could certainly get closer, and has in fact been closer, even recently, to envisioning a lot more easing. And so you could get much closer to 75 for next year. Moreover, the curve here could see a bit of a twist and shift this cut here up at least into February with greater certainty. At this point, we're looking at about a 6 basis point overshoot for February, so we're not quite there, but we could see greater conviction here. And of course, this curve could angle down to a steep